How you doing? This is Brian here, taking questions for the Algo Trading Python course. We got one person already online. How you doing?
I'm great, thank you.
Cool. Okay, how can I help you out with any questions you may have about, I think it was strategies and what's offered in this thing?
Well, I've gone through the course,
Yep.
just the outline because that's what's available,
Yep.
and it's got a lot of good information, such as it's got some basics about Python, some NoSQL databases, how to go from one format data format to another, things like that.
Yep.
However, and this is really good, and some of these things I've never heard about. What I was looking for and what I was curious when it comes to the course is I'm in technology, so I get the technical side, and that can be researched pretty straightforward. And then most of this, some of it, I can probably figure out with relatively little research.
Right.
What I was looking for is the eventual goal, just like anybody who's interested in this topic, is to build something that knows when to buy and sell, and B does so in an automated manner.
Right.
I see the course covers, and I could be wrong. That's I guess why I'm here. I see the course covers the automated manner part,
Yep.
and it covers background on some technical analysis from what I see, like bands, Boolean averages, and things like that.
Yeah. Yeah.
I've done some research, on Forex trading before, and things like that. So most of this I already know. I'm curious about the course. What I'm mostly curious about is the first part, which is the actual trading systems and things like that.
Okay, so you're referring to what module? Do you remember? Or I got the first three right here.
Well, module 2 Python math tools and technical. Oh, by the way, what I see on my screen when it comes to the outline, it's not as nicely formatted as yours.
Oh, that might be because I'm logged in. That's why.
Oh, okay.
But I'll answer whatever you have questions on.
Sure. So I'm looking at.
Go ahead.
Yeah. So ideally, I would like and maybe if there's a different course. So I'm trying to also figure out if this is a good match as well. I mean, this is a lot of good information. But ultimately, I'm looking into what knowledge I need to actually know what to buy and sell, how to analyze that, and how to separate. There's a lot of information out there. How to separate the gems from the flop. There's a lot of flop out there.
Right.
So maybe you can give me a little bit more background
on this. Well, let me ask you: are you a trader or have trading experience, or are you just more of a coder?
Well, I did software development for a living, so the coders I'm comfortable with. As far as trading, I was looking at Forex a couple of years ago for quite a while. Did a little bit of it, wasn't really successful. There's a lot of opinions on that, and eventually something came up, and I kind of abandoned it.
Right.
But now I'm really curious about, cryptos are at a level where they're very serious contender. There's a lot more volatility, but there's also a lot more information available as well versus Forex. Forex, somebody drops and manipulates it, you don't know until it's too late.
Right.
In cryptos, you have some leeway. It's a lot more open. So I think the whole landscape has changed a little bit.
Yeah. Okay. So you've dibble dabbled in the trading aspect, but you're just more interested in more the advanced trading knowledge, I guess is the right way to put it, right? Hey man,
yes.
How you doing? Yeah, how you doing? Okay, we're just talking here. Okay, so regarding your answers, is it Andre, or I always get Andre? How do I pronounce it?
Oh, Andre's perfect.
Andre? Okay, cool.
Okay. Andre's good.
No problem. Thanks. Just so you know, I have in this module here, the very last module, I cover different topics and what you're referring to. There's some areas that may help you out. One of the things that a lot of people asked for was this particular module right here. Like when I put out stuff now, I always refer back and use this course as basically as a framework for what I put out on top of this course. So as an example, I have this thing called a trading bot template. So it's a very simple trading script, but all it's doing is simple moving average, a buy and a sell signal. That's all it is. There's nothing more complicated than that. It's a straight up what's in the basic bot to make it work, and I'm using cryptocurrency, the CCXT for the wrapper to all the exchanges on crypto. I'm using in there a basic, well, it's actually pretty advanced, the technical analysis TA lib. I also include, I use a charting package called Chart Director, but it's when you combine it all, this particular script will cover that as an example. But then as you move up the ladder, I have these other courses here that are available, and that would probably be more helpful for you. Is I have this course called Evolution of Zero to Hero. And what this is it's really designed, if you're a coder, and let's say you've used C without, like in my time, I've been coding since the late 80s, okay? So I go way back like a fossil that you never heard of, right?
Yeah, I started with the 90s, so...
Okay, so this is before IDEs, right?
Yeah.
So this particular course is like classic debugging techniques that you can use to understand how to download market data, be it any form of data. If it's let's say crypto, Forex, futures, stock, whatever. What you're doing is you're going. This will walk you through the raw logs and figuring out manually how to find patterns in the logs, and it's using classic debugging techniques. So that's one example of something I put out there. And if you're, let's say, more advanced but more convenient stuff, I got this thing called Oanda and Forex Workshop, which basically takes this framework I have, and then it's the same framework, but it's just now moving it into the world of Oanda for Forex trading. So I have that. And if you're way advanced, I've got these two other courses that will go over interactive brokers with Java and C. And I got this other course that is kind of like Python, but it covers, if you go into like futures and options, I got this course that will show you in all the major classic fundamental and macro level stuff for futures and options. So I have more advanced stuff, but most of the people that come through the doors are like fairly new, and as you're kind of like the typical market I used to market to, but because there's like Quantopian and all these other free open source websites out there, like that market has dwindled for me. So as a result, I focus more on non-programmers or people that have enough knowledge on the technology side to be able to build their own custom bots in a more convenient manner. I mean, there's still a lot of work ahead, no matter what your level is. But this introductory is kind of covers everything, and anything I do in the future, I always come back to Python, and I'm always coming back to this stuff that I leverage off of to be able to put out custom trading bots real fast.
Well, what I'm looking for, and then like the eventual end goal, of course, is to have something that runs, and that's correct more often than not, right? That's the holy grail, because if you're correct more often than not, and if you set up your leverage properly and mitigate the risk, you're already ahead. I mean, if you're conservative, not conservative, you're already. So that's what I'm wondering, like which technology I can master and everything, but what would be a way for me to get there, like with these courses, and which one would be best for that? So at the end of the course, I have a bot running, and it is correct more often than not. Like it's actually making.
I think that this kind of course, this is assuming machine learning doesn't exist. Okay, so if you were to go through this particular course, this algo trading in Python to get you started, this will walk you through all the steps that would be needed for a trading system, database, charting, how to acquire the data, how to put an order out. So it covers all those basics. But the other question I'd ask is, what is your primary asset class that you want to trade? Because that's a really important question. But at the end of the day, chances are whatever you decide to trade is, out of convenience, my opinion, you'd want to work with Python, because it's easier to maintain, and you can customize things quicker, and it's less maintenance compared to other programming languages.
Well,
Yeah, go
Yeah,
ahead.
that's the thing. Right now, most of my development is on Python. I'd say like 90%.
Yeah.
And a lot of cloud, a lot of whatever stuff. And not only that, I worked with some data science guys probably a couple of years back.
Yep.
And I remember them telling me that like because R used to be the king, and they're saying all the stuff from R has either gone to Python or transferred to Python, and even the courses that I've taught in universities, everything's going to Python.
Right.
So I'm assuming that Python at this point is mature enough and has all the support, all the packages, and everything else to do pretty much anything you need: data science, data analysis, whatever you need.
Right.
Yeah.
Because that's another big factor, is because if you're trying to get into these big shops, like the high-frequency trading shops, chances are they're going to be using Python, and as they move into machine learning, or a lot of them do, they're again going to use Python as the standard language because, like, was it 2 days ago, Google just released the new TensorFlow 2, which is now public, and a final public release, and that is where everybody's going to move to for machine learning / data science / AI, and obviously trading is going to be on the forefront for that. And a lot of that's going to be driven because of Python. And we know that Python's probably going to be the standard, but the other problem with machine learning is there's more people asking questions, is machine learning valid to be able to determine, can you build profitable models with it? My answer is yes, sort of, but I think machine learning is more applicable to other things, more like in risk management or portfolio optimization or money management. So all these courses that you're asking about here, like the zero to hero thing, to find the patterns yourself by going through a debugging process, what you're doing is you're going through a couple hours looking at logs, and you're able to determine what to output through a debugging statement into a log. So if you're comfortable, like I like momentum, so I'm always looking at things like momentum itself, rate of change, and things like that, because I know my entries work all the time. So that's what I focus on. And the thing is, all that came from going through this process of this course here, this evolution to zero to hero. I don't talk about it a lot, but at the end of the day, this is where a lot of my crust of everything I do comes from this. That's why I developed it. And then I developed this other one for the Forex folks for Forex. So it kind of, all this stuff covers all the different basics, but in terms of, at the end of the day, finding patterns is the key to everything, okay? Like doesn't matter who and what way you talk to. So if you're able to get a skill to be able to find patterns in markets by looking at raw data from a broker, raw data from a crypto exchange, and you are able to see patterns, you're halfway there. And then once you build those patterns and get pretty confident with it, then the next step is, how do you build your entry? And I can say without a doubt, my entries are 90% accurate, without a doubt. Where I struggle is on the exits. So on the exit front, again, having those patterns and having those skill sets to understand the patterns on the exit logic, and you can figure ways to master that. That's when you become profitable. Because here's the brain explosion moment is, it's fine to say you have an entry that can be profitable. The word to underline is can. And the thing that most people will struggle is trying to find ways to be able to, for sure, have a likelihood of profiting on the entry. Do you follow me?
Yeah.
And the problem is, when you build a model that you think will be profitable over a period of time, here's the other thing that changes. It's the market regime changes. And when you have a working model, maybe a week, a month, 4 or 5 months later, that trading model no longer is valid. Why? Because the market regime changes and your trading logic may not be as valuable as you think. So that's why I put a lot of emphasis on finding the patterns. Like, first and foremost is develop the skill to find the patterns, because it's one thing to use technical indicators or technical analysis indicators, but a lot of them are lagging. So RSI or other indicators lag. And that means by the time you have a system written or a model developed, the trading opportunity has come and gone. You see what I'm saying? Because
Yeah.
You may have that. Go ahead.
So I don't know if you heard of Steve Maluda.
Steve Mayotta. Let me Google it. How do I spell him?
He had a Forex thing called Beat the Market Maker.
Beast.
Yeah, or Beat the Market Maker.
Okay.
Yeah, same thing. Well, Maker.
Market.
Yeah, there we go.
Yep.
Yeah, Beat the Market Maker. So basically, what he had a Forex system. What he said is that there's a lot of like technical analysis out there where they say, hey, if it crosses this and there's resistance and whatever. What he was advocating, which was very interesting, and there's a method behind the madness, is that people basically with a lot of money, they just basically manipulate the crap out of the market.
That's
and the market makers, yeah. So with the currency, they move here. There's some rules that they need to follow because they can't just, if they move the shit too much, they're gonna crash things. So there's gonna be people upset.
Okay.
So there's all these things, and he covered all the strategies. Like I followed him a while back. He covered all the strategies where what he says is that the technical systems are out there basically just needing people by the nose. So like, oh, you have this, it works for a week, and then they're like, oh, you know what? They know what you're doing, so they just boom, take out your stop losses and go the other way. Oh crap! I just lost money. Yeah. So the whole thing is like a dog and pony show, basically. So and it kind of goes into what you're saying. So what you're saying is that the model, everything might make perfect sense. You're like, oh, if it crosses this indicator, if its indicator lights up. I mean, I'm speaking metaphorically.
Yeah, I know what you mean.
Then do this. Oh, great! Oh my God, my system works. I can make so much money. And then a week later, you set up all these things. You get a little optimistic. You go a little further down. Now, what's happening? It doesn't work. And you just lost all your money. So Forex is notorious for that. I've heard a million stories, and I heard of people, with a ton of money doing something that they work for months. So if I'm hearing you correctly, what you're saying is that a lot of times these solutions, which is what I asked you initially, is that, hey, if I do this and this, and if I follow these indicators, then it's going to work, and I'm going to be right more than wrong. What you're saying is it's beyond that you have to find those rules to begin with, and the course that you're suggesting tells you how to approach that.
It's a different skill set we're after, because when you look at the world of quant, and everyone's now talking quant, and what they're doing is that they look at trading patterns. That's what quant is. It's just basically looking at market data and finding patterns. That's why I say you should focus on that skill, because once you have the ability to do it from a mathematical perspective, if you can find it from a technical analysis perspective, and you can somewhat find it from a technical point of view. But the end of the day is, even if you, as I said, even if you find a trading combination of indicators at work or other mathematical techniques, a lot of the time, not saying that model will not work. It will work for a period of time, and then over time it's going to break down because the market regimes always change. Like 1 minute you'll have one asset that does really well for a period of time, but if you use that model, it's going to eventually break down. It's just the way the markets work. So that's important to understand, because you can look at all these different indicators, but if you're using a combination of wrong indicators, you may be barking up the wrong tree or eventually wasting your time over the long run. Because we're not even talking about order book information. We're not talking about news-driven events. There's a lot of things that are not talked about out there. There's not one system like some kind of magical unicorn that will conquer all. It doesn't exist. And you're not even factoring in volatility as another problem too, because if you put on a trade today using some model or some trading technique, what happens if that asset class or that particular instrument suddenly goes into a very volatile environment or regime? Then what? Then your trading idea becomes, I don't want to say irrelevant, but it just is not as valuable as you want. And if you're trying to build a whole lifestyle or income stream off of one trading model, it's eventually, at some point, it's eventually going to break down. And it's just, from my perspective, it's just not the best way to analyze the markets.
No, I see what you're saying. It's definitely very valuable. Not only that, there's a lot of smart people out there, so I'm sure there's a way to either something that works and somebody discovers it. I'm sure enough people pick it up and somebody's aware of it, they're going to manipulate the market the other way.
Well,
which is what these guys
I will tell you, okay, when you say manipulate the market, the question is, in what level are we talking about? At the broker level, and at what type of asset class are we talking when it comes to manipulation? So that's a question I'm asking you.
No, that's a good question. So I was thinking of focusing on the cryptos just because it seems like it's a slightly easier, I guess.
Well, I'll tell you what I like about crypto is because I just put out 3 videos today on somewhat commodity, Forex, and the commodity I would include stock indices, precious metals, agriculture, and financial like bonds. Okay, when you look at crypto, I had just today. If you were to look at the markets today in the world of crypto, I look at 5 cryptocurrencies, including Bitcoin. They all moved 10% today, all of them. And that's without.
They just dropped 20%. I mean, Bitcoin just dropped 20% last week.
Yeah, that was last week, but I'm talking today. I'll show you. I'll go on a TradingView. And I'm only using TradingView just to show you that this is something I'm not coming up with, okay? Like I said, I'm just going to rehash on the videos I put out today. So if you look at Bitcoin USD today, here, BTC USD, and I like Kraken. That's the one I'm on. Are you out of the US?
Yeah, I'm actually out of Florida. Okay. Where are you located? If you don't mind me asking.
What's that?
I'm in Florida.
Okay.
US.
I'm out of Canada in Toronto. So this.
Nice. I just came back from Canada, Calgary.
Oh. Well, it's cold up here now.
It started snowing the day I arrived.
Oh, you were out west in Alberta or Calgary?
Yeah, I was in Calgary for a day. Then I went to Banff for a couple of days.
Yeah, lucky you.
Just somewhere different.
Yeah. Okay.
Well,
so let me show you the 5-day view. This is what I highlighted today. Okay, so this is the 5-day view. Okay, so you won't hear about this move today, right now. This is using Coinbase. Okay, this is today. So we're right now. Let's say somewhere in around here. This is today. Is Bitcoin. Okay, 7,800 moved up $500 today. When you do the math, that is just under 10%, just roughly. Okay.
That's a lot.
That's what I'm saying.
Imagine US dollar dropping 10%.
Yeah, but that's just today. Okay, and if you want to get more excited, I'll show you Ethereum US dollar. Okay, you'll never hear about this in the news. Yeah, I mean, if you're looking at the market, or listening to things like CNBC or Bloomberg, they'll never talk about these moves. But here, I got Ethereum USD. Again, it doesn't matter what the exchange is, but let me show you the 5-day move again.
When you trade, I mean, I know Bitcoin takes a while to propagate the trades. Is it Ethereum? Like, what's best for trading?
Everything. Anything that's on Kraken in US dollar. So right here, we've got another big move with Ethereum. Okay, so $170 moved up to, what am I at right now? At the high of about $187. I mean, that's over 10%. That's just today.
Wow.
Right? So usually that will kind of like, people go, oh, I didn't know. Well, that's because you're not building a bot to watch for this stuff. Right? Here, you could make some nice cash right here on this drop on the short side. Right? And that's why I like crypto. And the best thing is you don't need to have leverage for these kind of returns. And it's 24/7, 7 days a week.
Does it? Do they allow you to short?
Yeah, through margin you can, yeah, but you have to have the cash to cover it.
What's that? I know the US has a lot more regulations. I mean, since you're Canada, I'm not sure you're aware of it, but do you know if they have any kind of restrictions? Like, I know for Forex, the leverage was only very limited, and a lot of people, supposedly we knew what they were doing, would go to Europe or something, because they're actually like 100 or 1,000.
Yeah.
I know the US is like way less than that.
Well, they're trying to quote unquote protect you, but the special interest always will have a way to keep. It's because the institutional want to have control on the overall capital markets and not allow the retail traders to be able to profit off of it. It's a racket in the U.S. It's the problem. But
yeah. Is Kraken a good exchange to run this against?
Because I built a this is Coinbase. I built a Coinbase bot and exact same trading logic. Everything's the same. I only trade in US dollar because it just helps remove a lot of the volatility. And the thing is, what I found with Coinbase, there are some opportunities, and I don't know if you know, but last week they've
don't they charge crazy amounts of transactions?
Yeah, they just did that. They just raised it like by double. I think more than double last week.
I remember some trade that, I mean, this was back in the day, but I remember some trade to make it to Coinbase was like $6. Meanwhile, Gemini or Kraken was like 30 cents.
Yeah. It's
point zero. Like Robert.
Well, yeah, it's pretty cheap, and I have not looked at the new Binance US exchange either. I haven't seen that, but apparently the volumes of the Binance US are blowing away other crypto exchanges like Gemini, as an example. But there was also another report that went out the week before last, and they asked who are the cleanest brokers. Kraken came out on top, and Binance was number one as well. So that's another thing you have to ask yourself is who are the clean brokers that are not, or sorry, exchanges that are not manipulated. And it looks like
Kraken never got hacked. That's another thing.
Well, yeah, it did a few years ago, but apparently they've like really worked on the security end as well. And I always will tell people is like whatever exchange you go with, you got to make sure whatever the capital where you start with and funding an account that you're willing to lose, because you don't want to. People in Canada put into an exchange their life savings and they got basically robbed. And with any type of trading, you got to make sure whatever you start with that you're comfortable in losing, because it can happen. I'm not saying it may not happen.
Let me ask you something.
Go ahead.
Well, you do this full time, right? This is your primary passion.
You're right.
So I was curious because I know in Forex they had separation of markets, meaning like Asian market opens at this time to this time, and then European, England market opens from this time to that time, and then New York opens. So they have this windows for currency. I mean, for crypto trading, there's no such thing, right? It's pretty much free for all around the world at any time, correct?
Right. Yeah. I mean,
or is there times when it moves more?
No. I don't think so. I haven't seen any patterns that are based around time. I have seen occasionally, and this is a few months back, where nobody's going to be eyeing the market in the crypto world on a Saturday or Friday night. But guess what? The markets were moving, and there are a lot of profit opportunity on a Friday or Saturday night. But I haven't seen that in a while. But it's the timing. It's very random. And when it comes to this sort of thing, especially in the world of crypto, I always compare whatever kind of bot you build. You're gonna like. I always compare it to fishing. It's like you put your rod in the water. Yeah, it's fast moving, but once there's a bite or a series of bites, then yeah, you go into the market and you trade. And for a little while, it could be 3, 4, maybe 5 hours, and then the markets will die off again. But there's going to be those trading hours that you can trade in and get, as you can see here, from let's say 23 o'clock to 18 o'clock, where over 7-8 hours, you get a 10% move. You may not see that move again for a week, but you'll definitely get these kind of moves very frequently. So as long as you keep your rod in the water and it's always hunting for those profit opportunities, it will bite. And if your strategies develop the right way, you will make money, and you'll make good money.
What kind of returns do you see the range of consistently?
Daily? Well, I won't say daily, but on average, I'm averaging about 1%. Like this year, between December till April, I was getting sometimes, and quite a few times, with over 10% without leverage with crypto. But those days are done because it's a lot more volatile. But I'm usually getting maybe 0.5% or 1%, but that's okay because you're doing it every day.
How safe is it? Meaning, by the way, I'm not asking for any guarantees.
No, I know, it's fair.
But I'm just curious because, it's always maybe especially in this, there's a million disclaimers all the time, this and that. And I know somebody. I remember I was talking to my friend when I was in Forex, and he's like, well, this guy, I put my money with him, and great, he got me like over $100,000. and then he lost 250 in a matter of 5 minutes. Things like that, which is insane.
Right.
So that's what I'm wondering, like, if there's like strategies or something that could be done. It's probably like a huge overlap between trading this and trading Forex, if I'm not mistaken, right? Like same principles, same even analysis kind of.
Well, I'll tell you, Forex is a scam. I mean, you just ask yourself, like FXCM, what they did. They got booted out of the U.S. So Forex can be a scam, but I will say I use.
What happened with FXCM, because it rings a bell?
Well, FXCM they were commingling customer capital and trading against a lot of the orders. The was it SEC or the CFTC did an investigation, and they got warned once. They did it again. They got booted out. Like the guy that ran that company used to run a company. I can't remember what it's called. It was based out of Florida called Ref or something like that. And it's the same guy that got banished in that space, and he started FXCM, and he got caught twice, and he got booted out. So you have other brokers like Awanda that are so-called regulated. I'm not saying they're safe, but that's why I say if you're going to play in this space, you got to make sure that you're willing to lose what you start with. Same with crypto. I will tell you with crypto, especially Coinbase, are really working with the regulators to stay in compliance with the regulators because they put in.
Oh, by the way, you're not using actual Coinbase manually, right? I think they have an exchange that you can go through, and the fees there are like fraction.
Yeah, it's called Coinbase Pro.
Okay, so on that one, you don't get ripped off on the fees.
I'm not saying you won't get ripped off, but if there's a problem and there's a lot of people with the same problem, Coinbase will be shut down.
Okay, yeah, because they're the biggest ones where...
Well, they're the biggest one.
Mom and pop trying to buy them go through them, so I think they have a lot to lose.
Well, the reason I use Kraken and or Coinbase is because it's U.S. based. So there is some form of regulation with these exchanges. But in terms of volume, now that's a different question. Is the Asian-based ones like? So I'm going to use adjusted volume here. In here, a lot of the Asian-based ones are blowing away volume-wise. But when you go down the ladder here, you will find Coinbase somewhere here at position 50. Like here, you got Kraken, and Coinbase should be up here somehow. Coinbase Pro. But eventually Kraken, the volume of Kraken will exceed Coinbase Pro because of the new fees that they've increased to last 2 weeks ago. So Kraken's a good exchange. To answer your question?
Oh, I'm sorry.
Yeah,
I lost the connection for the last couple of minutes.
Sorry, does that answer your question though, about volume?
Yeah, no, I lost the connection for the past a minute and a half. Can you repeat that?
Okay,
I heard Kraken and I heard when you were showing Coinbase.
Yeah, I'm just saying when you look at all these Asian-based exchanges, a lot of them are basically bogus.
Huge. Are they?
A lot of them are, yeah.
Wow.
Except maybe for Binance. I think Binance, but they're number 2. But Binance is pretty clean. And then when you work yourself down the ladder here, then you get into things like Coinbase and Kraken.
By the way, when you said 0.5%, that's daily, right? Or weekly?
No, that's daily.
This is insane. I mean, you have, because my girlfriend's in real estate. If they get 8% a year, that's considered magical. 10%, they're swimming in it.
Right.
This is insane.
Right, but I just showed you one trading opportunity on TradingView with Bitcoin where you could have made 10% today. Now,
but if it's catching down.
What's that?
Hindsight is 2020. When you were back here, oh crap, if I would have gotten it here and gotten out there, I would have made bank. But the trick is, of course, how do we know ahead of time, right?
Well, that's the thing. But if, like, what I do is a lot of my strategy, well, my only strategy right now is momentum-based. So as long as it's momentum-based, as I said, you stick your rod in and you wait it out for certain trading conditions. And that momentum of the market will drive up that price. And it's not just with Bitcoin. It was with Ethereum, Litecoin, Ethereum Classic, and a whole slew of other ones.
That does so is that like swing trading, where they look at the swings of the market and they see like when it's like when the averages start crossing the long-term versus short-term average, moving averages.
Yeah.
Okay, the whole market is going this direction, so it's a safe bet that it's going to go further. So they kind of do like more long-term bets sort of thing.
Yeah, it is. But there are other coins on Kraken, like private coins like EOS. Like last week, there was a 20% move over 20 days with EOS. Meanwhile, the market, all the Bitcoin and all the other coins were tanking. But between Wednesday and Thursday, there was a 20% move with EOS. Why? Because it's independent of all the other coins. It's Chinese-based. And when you look at EOS on the volume here on CoinMarketCap, it's the 5th largest coin out there, top 100. But there was a really nice move between Wednesday and Thursday last week. And all it takes is those kind of moves, and that's your trade of the week. Okay, so it's number 7, but these move around a lot, right?
Mm-hmm.
But the one, I mean, XRP doesn't trade. There's not a lot of trading opportunity, but there's other ones like Stellar. Stellar did well as well. Some other ones like Monero. So when the markets are off, there's these little ones that you can make a little bit of money here and there.
So do you have something that kind of watches over all of them? I mean, most of them?
Well, basically what I built is what I call a scanner. And it watches every coin on Kraken in US dollar. And that's about, I think it's how many? Well, actually, they've added 2 more. So it's about 18 coins that I can watch in US dollar on Kraken.
Wow.
So it's. I'm not saying you're going to make a lot of money, but the opportunities are more there than any other asset class that I've seen. And you could.
I mean, if there's even a way to do 10% a month reliably. Well, even 5% a month is still freaking insane. That's what 5%. That's 60% a year.
Yeah,
that is insane.
Yeah, I think it's possible to even do that weekly.
Wow.
Because you got to remember, when you look at everything in the world today, of all the trades, anything you could trade this year in 2019, what was the biggest trade? It will come back to Bitcoin when it was $3,000 in March, and by June it's over $12,000.
I remember that.
Yeah, you know what I mean? And, I mean, okay, that doesn't happen a lot, but even if you were just to focus on that trade, you don't have to trade for the rest of the year if you don't want to. There's no other asset class that gives you those kind of moves. None.
Okay.
You know what I mean?
Okay, so let me go side this for a second. You have the analytics service, which I subscribe to, and it sends notifications out to... Oh, by the way, I don't know, just a little bit about me. So I've been doing like development for about 20 years at this point, and I specialize in enterprise systems, and now I do a lot of cloud, especially in AWS, basically.
Okay.
So scaling systems, enterprise systems, any database you can think of, and anything. So technical expertise, there's plenty of. But using it for this would be magical, you know?
Yes.
So I'm kind of curious. So I saw the analytics service that you have.
Yep.
By the way, I was going through the site. Maybe I can help you clean it up, by the way.
Yeah, of course. That's why I do this.
Yeah, because when I was going through the site, I started emailing to begin with. It was really hard to find, like, how do I get this course? How do I subscribe? Because right now, even when I went to courses, and I'm not logged in, I went to courses, and when I click on, as you were talking, I click from evolution of zero to hero trading strategy, right?
Yep.
When I keep clicking on it, it shows so you have access to analytics, and anywhere I try to click and get more details, it shows that the page is not found.
Right. The reason for that is because it's for my elite folks that, you know, paying a little bit more money on an annual basis or whatnot, and they get access to all that stuff. Whereas,
of course,
on the lower end of the market, you know, like $200 or $50 a month or whatever they can pay. That's why I only focus on the marketing side of the analytics and the Python course.
No, of course, but also, so the way I find out about you is I have a couple of friends in the crypto community who are pretty, not crypto, well, more of blockchain, I guess.
Okay.
Because the people have a lot of hate with crypto. It goes up, everybody loves them. It goes down, oh, it's a scam.
Yep.
So it's more about the blockchain technologies. I have a couple of friends who are pretty high up in there, and when I talked to one guy, I asked him, hey, you know, I'm curious about trading, I'm curious, and he said, Brian Downing.
Oh,
The only thing he answered. So he can't very highly recommend it.
Oh, wow.
So I found the Quant Labs. I found the website. And, I found you on I don't know if it was LinkedIn or Instagram probably. And then I went here, but that's what I had trouble with. So I started emailing to begin with because I had trouble going in and making sense of like where to go in the site, like how to get information and how to subscribe to things. Like if I want to pay, what's a good match? Like put on credit card.
Right. Well, that's why I'm going through a major transformation right now. Like I've got a bunch of sales pages, so I just had a whole batch like 2-3 weeks ago, and I pull them all down. I got new ones put up. So all the stuff I do on the social, I just push them to the new sales pages. But I do have a standard store like here at the Quant Labs. Well, let me just see here. If you go into the blog, let's say, or here, and then just go under the store. Like I got all this stuff here, right, with all the detailed descriptions and presentation videos. But sounds like what you're trying to do is come under here.
Yeah, just click right on the.
Right. Yeah.
If you try it in incognito, and then go to click on even the one that from 0 to hero.
Right. Yeah. Well, right now I'm logged in, so you would show up and what's available in the course, and it'll go through all the content.
But if you're not signed up for it, doesn't really.
Right. It's just a teaser right now, and most people don't really care about all this nitty gritty stuff. What they care about is how do I get started? How do I get started? And then the next conversation, you realize they're not a developer, they're not advanced like you, and then then you got to sell them on the analytics because that's more a service designed for non-programmers. So that's 99% of my conversation with people.
Well, they probably hear, cryptos make money, how do I do it automatically? So I saw the sales stuff, by the way, it's really good. They're like, hey, with very, if you need to know anything, a few steps, you can automate and you can have a system. They're like, oh, great. This is exactly what I'm looking for.
I wish I could say that. I put up a little article yesterday. I used to have this thing called a track record right here. And I was hoping to have that working. I've worked on probably, let's say, the third version of it. And it's really hard to maintain this and actually keep it working and da-da-da. And I thought, even if I was to put up my own track record and people would like download it, look at all the positions and all that, most people would still not believe what I'm doing. That's why I say here, at the end of the day, I have to use these third-party journaling sites like Crypto, CoinCompare, or MyTrading FX or whatever it's called, and have those services log into my trading account to actually build a credible story for trading purposes. Because all this stuff that I generate is useless because people won't believe it because everyone's all skeptical and stuff. So that's the problem.
That sounds amazing. So you have an analytics service that you have, which you subscribe for.
Yeah.
And I see the emails coming in again. So so what you're saying is for a lot of people to use the service, all they need to do is they need to process those emails. Or even, I think I've seen you mention if they load up the MetaTrader 4 and they just subscribe to you as expert advisor, I forgot the terminology.
Yeah, I'll tell you that story. Okay, so if you come into my GitHub, Quant Labs.
You put a comment
there. Yep. GitHub. Yeah, I think it's called GitHub Quant Labs. Oh, hang on here. My comment here, it doesn't help. So this has been an interesting process over the last, let's say, month or two. So I've got this project that I put up. Man, where am I going?
If you just GitHub.com/quant labs, I was able to pull it up.
Yes. Okay. So I've got numerous old projects in there, but this one is what you're probably speaking of. This one, algo trading signal with email. So in there, I've got a variety of different projects that I have. And the original concept was to be able to have people receive an email from my web server when I send out an email. People don't know how to process it. And I try to do it through the expert advisor on MetaTrader or using Python. But people still couldn't understand how to work with it. And when I built what I was doing, it was very. We did a demo last week with somebody here asking about. Hey, I'll just get your question in a minute at HFTPC. But you realize that it's a struggle to be able to, with all these moving parts, to be able to generate another mechanism that will receive the Forex signal on the email and then process it through the MetaTrader. And that's a really difficult thing to do because it morphed into this monster, which is really hard to maintain. So what I do is I have all these open source Python scripts to try to help people to be able to process that email and then be able to send out their own orders through these Python script examples.
What's the track record, if you don't mind me asking, for signals are going to be slightly delayed, I'm sure, because of the web, because of the SMTP servers and the email kind of coming in. But on average, if somebody subscribes to this, they can get, because I can probably set it up in the Linux box and EC2 somewhere and forget about it, right?
That's the hope, yeah. But the problem is, in terms of the track record, the daily returns were all over the place. It just was. I mean, there was a slight positive equity curve building. It could be a week where Forex was doing well, and then a tank, or same with the crypto. The crypto's all over the place, without a doubt. The other problem is with how it was built was the Bitcoin trades easily blew out all the other trades for the day. And if it was a big negative Bitcoin trade, it would blow out all the profit. And then people would go, well, it's unprofitable. I go, no, if you take out that Bitcoin trade, the rest of the trades are profitable. So it has a decent positive equity curve. The problem is the Bitcoin, because the Bitcoin is so skewed. So it all comes down to position sizing. So one of my next steps is to normalize the position sizing for all of the crypto coins to sort of build a positive equity curve, if that makes sense.
Well, I mean, taking out a Bitcoin, but how do you know? I guess the trick is knowing what to take out, right? Before, if Bitcoin is like that, then okay, if you do everything else and forget about Bitcoin for a little bit, that'd be great. But I wonder if it changes week by week. Like, for example, next week maybe Bitcoin's doing amazingly, Ethereum is effing everything out.
Yeah, it does change week by week. If I was to show you in Forex, all the hot pairs right now would be, I just looked at today, it was the British pound against the Japanese yen. 2 weeks ago, and for many months, it was the euro against the Australian dollar. So like that's what I'm speaking of when it comes to the market regime changes. So as long as you know where the money flow is going, you can consistently profit. But the only way to know is by scanning everything and seeing where the hot capital is going. But in terms of Bitcoin, that is all over the place. It's so random. But I will tell you why there's been drops over the last number of weeks was when Facebook brought out the Libra, and there was these congressional hearings, and they were just getting toasted. That brought down Bitcoin because as an asset class, they questioned Bitcoin. Then
I thought they backed off there. They decided not to touch it for.
No, it's still going forward. Like there's
really?
a fund out there that are putting out a derivative product and they're building a derivative product that you can build or profit off of based on the schedule of when Libra gets released. So Libra will get released. There's 28 companies involved. So that's Libra. That was step one that brought down the value of Bitcoin. Then there was a hope of this new futures exchange called Back-In that would push up the price of hang on, I'm sneezing. I'm about to sneeze. Sorry. Excuse me. But thank you. Back-In was a complete failure 2 weeks ago when they introduced it in the market. So that's what brought down Bitcoin from 12,000 to 10,000, and then from 10,000 to 8,000. That's what brought down the price of Bitcoin at $2,000 each week. But that's the problem of crypto. It's all heavily tied back to the news of Bitcoin. So the problem is crypto overall is all over the place, and it's really hard to make predictions on where it's going to go the next day. But what I'm doing is I found ways to say, yes, I have a trading entry that works. As I said, though, it's always the exit side. The exit logic's the problem. And it's always, well, if you're trading an instrument or a pair that is very volatile, why would you trade it? Don't take the trade. So you're always looking for trading pairs where the volatility is very minimal before you take the trade. And that's one of the things that I factor in. But the problem is, even though you think you could take a trade before it goes volatile and the whipsaw, the negative whipsaw will go against that position. That's always happening, and this is the big challenge on the exit logic of trading whatever it is. That's what I'm finding. So in terms of performance, it's still a positive equity curve, but it's not like what it was between December and April, where it was really good. So it's you'll make a little bit of money over the long run, but one of the other things that I focus on is controlling your losses and your trading cap. Now I'm gonna bring Mr. HFTPC back in. I think he has some questions.
Sure, I'm sorry, my connection dropped out.
Oh, no problem.
It's okay, it's not at all. Can you hear me?
Yeah. Sorry to do that to you. Go ahead, man. You have some questions.
You brought up a very interesting question regarding this Forex stuff. You were saying that after the second week, if you have a positive trade, you had a positive, they will play with your strategy?
Yeah, it's called stop hunting. Yeah.
Oh my God!
But
I heard it's a certain percentage. Like if you were going little percentages, they don't bother you.
Well, there's ways to get around that. One of the things they factor in if they're going to do this is by looking at your leverage. They want you to take as much leverage as possible, and they also want you to lose because the thing is when you blow out your account, chances are, or at least lose money. On the either end, they're gonna make cash at whatever end, loser or profit via commission fees. But I got a video on my website regarding Forex trading.
Okay.
It's called 6 Ways That Your Forex Broker's Screwing You. Okay. So hang on here, I'm gonna shut myself up. Oh no.
I'll check it out.
Yeah. There's a concept in there, and it's been confirmed by a professional trader in this video. Let me just see if I can find it here.
Actually, in the market maker thing, they were saying that a lot of exchanges, if the exchange is big enough, they can actually analyze internally. They have huge positions. They can analyze internally. Hey, here's most of the people have a stop loss here. So if we go this way, we can make a ton of money. So they don't target you specifically, but if you're in the pool, most people are hoping for this, they can take them out with a stop loss hunt right there.
Well, I have seen back in the early days of when Owanda was a good broker, and I got a tour of the trading desk because they were started by some folks out of my own college. And they gave me a tour of the trading desk and the market making side. They make a lot of money on market making, no doubt. But the problem is Owanda is so big enough where they keep all the trades internally within their own network. It's very rare they have a need to step outside of that network into the prime broker. And their prime broker at the time was Citibank. So it's very rare that they don't need to step outside of out of their network. But what happens is they want you to trade a lot of the big six the big six pairs being U.S. dollar, Canadian, British, Euro, Japanese yen, and the Swiss franc. They want you to trade those. Why? Because they don't move. They don't move, that means now you're forced to use leverage. So when you bring in the leverage, it's 5 times, 10 times, 50, 100 times. And that's where they make their money, because if you lose against that, that eats into your account. And then there's another concept of insider. I just wish I could find this video. But basically it covers that these topics I'm speaking on. I just can't remember. It was a long time ago before I put out this video. But there's a lot of ways. They have about 6 ways to screw you over. But not a lot of brokers do it because they're now heavily regulated. But that's one of the reasons why they take away leverage is for that, to protect the retail Forex trader. Because they're trading on, I hate to say it, ignorance.
So basically, making it short, you're saying that they're looking at your stop loss to play around with it.
Yeah.
Bingo.
Oh yeah, it's called stop hunting. A lot of the schlocky brokers do that for sure. Like we had a guy on last week or 2 weeks ago, the Russian ones. Yeah, it's called stop hunting. And yeah, there are ways to avoid that. That's where you build your own. So there's a definition right there. So they attempt to force some market participants out of their positions by driving the price of an asset at a level where many individuals have chosen to set these stop losses. So what you're doing is if you set a stop loss with your broker, what you're doing is you're signaling back to the broker saying, I want out at this level. And if they know that, they could trade against you. And that's what FXCM was doing. But there are ways to control that because through using Python, you can set your own virtual stop losses and have your system know when those stop losses to get in and out of positions virtually, but you're not signaling it back to the broker. You see what I'm saying?
But the broker is still going to screw you because if most people, you're just going to be caught with a pool of people. So if most people predict it's going to go up, they might move the market up just to take out a stop loss and then move it down.
Right.
So that's basically most people get screwed, even if your position is not explicitly known, but others is.
Well, they will. They'll know exactly, as you said, if there's a lot of people out there trading a certain pair and they're setting a certain, we'll say, ignorant way to set a stop loss, the broker knows that. So they'll have a way to say, okay, and I've guided people that were ready to sue. I'm not going to say big names, but they were going to sue some of the brokers, and I educated them on what is going on, and there'd be a lawyer on the broker's side saying, no, that's not true. Our stop losses were because of our technical, and we kicked you out of the trade before even the stop loss kicked in, so your profit's not as high. So what one guy did was he went out and he filed the paperwork to tell Oanda in, well, I can't remember the court. It was like a circuit court, local, to file the notification to Oanda. All of a sudden, Oanda's tune changed, and they wanted to settle with the guy, and they didn't want that court case to proceed because more people that do that, that's going to get a lot of attention with the regulator. So anyway, came back to the guy and said, okay, we'll settle, but we'll double what you want to shut them up and not have the court case proceed. So a lot of these brokers are going out there trying to cheat their customers, cheat them when the customer's ready and really serious to take them to court, but they know they may get into trouble. And what I'm seeing is there's very few brokers in the U.S. that are regulated will go ahead and try to screw over customers because they're heavily regulated. And that's what happened with, as I said, with FXCM. Because they got booted out in the U.S. They got banned from the U.S. With the CFTC. So even if the broker still wanted to go ahead and do the stop hunting, there are ways to make sure you're not going to get cheated. As I said, the way to do that is by having a system that you develop that will virtually know when the stop loss is. And I do that via Fibonacci levels. The broker doesn't know that, so I know I'm in a pretty good situation. You know what I mean?
Yeah.
That's why when you use a platform like MetaTrader, you will be forced to set a lazy way of a stop loss, and boom, that's when the broker knows you want a stop loss at this level, right?
How much, if I may sidetrack, are the courses the same price or different courses at different prices?
No, for the one that you speak of, well, let's say that Python, it's like $250. That's the one course. But as I said, I've got the Elite thing that gives you access to everything.
How much is the Elite thing? Because I clicked on the store and it said, hey, put in the credit card, but there was no price.
Oh, yeah, I'll show you how that works. Give me a second here. Okay, so let's say you go into the store here. Because right now we've got the Elite right here. So right here, as it loads up, and again, I'm using Stripe, the way this thing's set up. Do this buy now, it pops up, so it'll say register for Elite, and here's the price right here. So it's $9.97. But that's going to give you 3 years to everything I do.
Okay, and how much is the Zero to Hero course?
That's part of this course. That's part of this membership.
Oh, so it's not available separately?
No, unfortunately, no. The only thing that's separate is, as said, is the Python. It's like the gateway to everything. So the other one gives you access to, like the elite thing gives you access to all these ones listed here.
What's the elite trial?
I don't do trials. That's the thing.
Oh, there's a trial if you do it with the menu, the elite menu.
Well, the trial probably your cheapest would be to try the analytics stuff, and then from there, if you like it, either go with the Python stuff. If that's good, then you can easily move into the elite stuff. It's up to you what you want to do. Like,
no, because I'm just getting into it. So, like, as we start the conversation, I might not even know what I need or what I want in this case. So I'm trying to figure out the way to learn.
No,
and what would be the best match. That's why the conversation was so helpful.
I personally think if you want to try it out, just go with this Python thing, and if you like it, you don't like it. But I think there's enough in there to get a lot of value out of. And if you want to go the next step with this elite thing, that's cool too. I can credit, no problem there. So it's up to you what you want to do. Because my next promotion will be this elite thing. Because I'm going to have to reduce the 3 years down to 2 years. So that's going to be my next big push. But right now, I'm trying to get people through the Python. Because the concern I have with a lot of people that sign up for stuff, they don't complete it. And I'm trying to find ways to encourage them to complete it. That's why I have my chat server. Because there's people that will come in, want a trial, but I've done a $1 trial, $10, $20 trial, but I'm not bringing in the right kind of crowd. That's the problem.
You bring a cheap crowd then.
Well, it's the crowd that wants everything for free, and as I said, that's the problem. When Quantopia went mainstream, all this stuff was thrown out because everybody thought they could get stuff for free. Or that's what they were demanding. And then that brings down the quality of stuff like this because the problem is you can't talk. I don't know how often you could talk to somebody at Quantopian, or I'm doing this stuff every week. I'm very accessible through different options, right? Through the chat server, through the bot messenger. You know, not a lot of people do that, right?
The chat, you mean the chat that's on the side, right? When you go in, it pops up.
No. That's the messenger bot, the Facebook Messenger. What I'm referring to is I have a chat server that once you get something, then you get access to the chat server because that's where I put up a lot of more private stuff, I guess you could say.
Honestly, this has been an amazing conversation. I'm really grateful for you creating time for this and setting up a link. This is perfect, and you did answer all the questions. I have a ton more, as you can tell. I'm very inquisitive person.
I like to be straight up and honest. I'm not going to sell you a box of damaged goods and make you feel that you're getting ripped off because I'm always concerned. If people want to take this seriously, that's cool, but I want to see them succeed. And I'm here to do whatever it takes. Like I said, I do these webinars every week. If it's Monday, Thursday, whatever, we all have crazy life schedules, but I try to make myself accessible as much as possible, but at the same time be upfront and honest so people don't feel like they're getting ripped off.
Quick question. Do you want the API, evolution of zero to hero trading strategy, then incorporates the Python V3 stuff, correct?
Yeah. The whole point is you learn the Python stuff because if I was to say, okay, hey, I'm going to get you access to the zero to hero thing, there's going to be files in there that are generated, and then the next question will be, how do I generate it? Well, you got to learn it from the Python course. You see what I'm saying?
Mm-hmm. Yeah. So basically, if you give me those files and I don't know how to use them,
right? You don't know how to generate them. Like right here, I just put this up on Friday. So here, I got this little button here, so it's like $30, right? But what the topic is, it's like, I have too many losses, how do I control them? And the thing is, if you go through that course, that little video, it's about 45 minutes, there's a file in there that if you have the way to generate it, yeah, you could use this little piece of content. But the problem is, how do I generate it? Well, I'll point you back to the Python course, because that's where I get the data from. So I'm using the Python course as the as the gateway to everything else. You see what I'm saying?
So it's the one. So I clicked on something here: Academy Python Algo Trading Infrastructure with Cryptocurrencies.
Yeah.
And it says register to Python v3 Infrastructure Building Blocks. That's the one.
Yes, that's the one. Yeah, right here. Here, I'll give you the exact link. So if you go into the store, what you do is you'll find this one link right here. Click here for all Python courses, just one course. And this is what I sent you. And then right here's that big buy now button. So I'll put that in the course in there as well.
Yeah, no, as I said, I mean, yes, of course, everybody's paranoid, and I'm paranoid, and right now, the main overwhelm is that there's so much info out there, it's just nobody has time in 100 years to be able to possibly research all of it and do all of it.
Yeah.
So that's why what to focus on is such a confusing topic. Like, I remember asking somebody, some of my friends work in, the guy who used to work for me, he works in Amazon actually right now for the data science.
Yep.
And he was telling me, I remember seeing some course about data science, this and that. He goes, oh, that's already old, nobody's using that, there's this and this framework. So I'm like, oh, I just saved myself possibly like a few weeks hitting something hard when it's useless now. You know what I mean? So there's two things. So first, it's like, okay, what to focus on. And second, okay, this is all to facilitate, trading, to generate strategy, things like that. So like, there's even a glimpse of, hey, this not only works, it produces amazing results, it boosts enthusiasm, it boosts, so now nobody needs to be sold, everybody's like dying to throw the money in, you know what I mean?
Yeah, well, you've hit the nail on the head, but this stuff distills all the basic things that you need to build an algo trading system, or as what they call a trading bot. It covers all that, but it does not go into machine learning. But as I said,
that's the video I have, by the way.
What's that?
That's the video I have. Not formatted into sections. When you scroll down,
right?
Yeah, that's exactly. So you're saying it doesn't. So it covers the basics, but it doesn't go to machine learning.
No, not yet. And the reason why is because I've been waiting for this package coming out. So I've been looking for the TensorFlow 2. Now they promised it last winter, and they just released it last week. And this TensorFlow will radically change what you know of machine learning, like especially in TensorFlow 1. But
how much overlap is there? Is TensorFlow 1 now mostly inapplicable, or is it pretty much the same thing, just maybe some details are a little different and it's more accurate?
No. What the deal is that TensorFlow 1 was a very complicated framework to work with to set things up. And then there's Keras, right, as a separate framework for machine learning. So what Google did was they rolled in TensorFlow 2, or put Keras into TensorFlow 2. So that's the first major feature of TensorFlow 2. Plus they've done this, again, I'm no expert here on the lazy, what's it called, the lazy, I can't remember what it's called, but I'm no expert here in machine learning. But they made it a lot easier to set up your trading model before you simulate it. Whereas in TensorFlow 1, it was just hairy to set the thing up. But now they've had this new execution, lazy execution or something like that. Makes the setup a lot easier. So,
are you looking to possibly include that in a Python 3 course? Or
yes,
is that something that's
over time, yeah, I will. Because here's the thing is, I don't know if I could say, hey, I'm going to now create a machine learning model that will win trades all the time. I don't think that is possible, but I will tell you this. Right now, I just did this thing on the, what's it called? Where's my store here? One of the reasons I did this store thing, this little thing I mentioned, I just did on Friday. The market cap, the daily cap and stop loss, this little thing right here. This is where machine learning is going to be helpful, because what it will do is it will dynamically look at data from the past and my data, and then determine what the daily cap should be based upon the performance of certain instruments. And then it will determine it's kind of like using linear regression, but it's going to determine an exact daily cap on what my profit will be and my daily loss and what it should be so I can minimize the losses on the overall performance each and every day. But it'll self-adjust, and I'm going to use machine learning for that.
Let me ask you something. You were saying that right now the methods work really well for the entrance.
The entries, yeah.
I forgot the name for it, but you see what I'm saying.
Yep.
But the issue is the exit of the market.
Yes.
Is there? Are you talking from a maximizing profit, like, oh, I should have gotten at this point, it would have been like whatever, or because the way I'm thinking about it is, if the stop loss is a quarter of the way of the profit, let's say, then the profit's always going to be more.
Yeah, that's to assume that when the price action, after you put your entry in, that's assuming that the price action will hit that stop loss, and chances are it may not. Right? The only way it'll hit that stop loss on the upside is if there's enough momentum in the market to drive the price up to that stop loss.
Okay.
You see what I'm saying? Or I should call it it's really called a take profit.
Yeah, take profit. That's what I was wondering, because you're saying go up.
Yeah.
So for the take profit, you're saying that if you set the take profit a little too ambitiously, it might still go up. So you're like, hey, I was right. The market's going to go up. It just doesn't go up that much. Right. So it goes up, curves, goes down, and boom, you just hit a stop loss, and you're like, oh crap, I should have made profit.
Right. That's what I said, because there's always what I call the law of probability, and depending upon what's going on in the market at that point is what drove up the price for the entry, and what are the chances that you will hit that take profit level. And a lot of people, with the fear and greed from a human point of view, if it does achieve to hit the take profit, the next question is, well, what do I do now? Do I hang on to that price action and let it run up? And then you have to, what is the probability of that happening? And from my experience, usually your price action will drop off, and you no longer have the full profit that you could have had if you just took profit and ran and closed the position. A lot of people don't do that.
Can you take profit? Like, can you stack? Like, I remember seeing somewhere a long time ago when they stacked the take profits. So you get most of it out of a certain point, but then you leave a little bit to ride out. Hey, maybe I can do more.
You can, but that's basically basic money management, because I've talked to quite a lot of people. But the one guy that I talked to, who I called the London quant, I think of anything I've learned from him, and he was a real good trader, and he was probably the best trader I've dealt with out of thousands of people that I've come to know or been exposed to. His methodology was very simple. You take profit, you reach it, just take your profit and run. And then you total that take profit, and you figure out what your daily profit will be, like the daily cap. And let's say you hit 1% against the total capital you're willing to risk. Once you hit that 1%, then you get out for the day, because you've reached your 1%. And if you
basically don't get greedy,
right? Because if you get greedy, you overtrade. You overtrade, chances are you will no longer be able to maintain that 1% profit for the day.
Wow,
that's the problem. Because if you keep it simple like that, you will be able to. I'm not saying you will, but you'll hopefully achieve a 1% move every day on your trading.
Well, let me ask you something. I mean, this is great if and I remember that they were saying the same thing with Forex. If the amounts are small, right? If the amounts are, if I put $100 in, I go up by $1, great. I technically made 1%, but it's really not making any difference for anybody. So I know especially with cryptos, let's say if somebody does it for a living, let's say, the salaries are a lot higher, the pot of money you have in there would be a lot higher as well. Is there issues like, for example, having $100 in there versus $10,000 in there is a very different situation. Versus 100,000, who knows if stuff grows, because the whole point is percentages, right? So if it grows and keeps adding up, is there issues with bigger positions?
I don't think so, because when you look at a big exchange like Binance, there are people that out there. You look at the how they break down the transaction fees. They have, like, say, if you're trading $100,000 a day, your commission fees will drop. So that tells you there are people who are making like 6 digits daily, for sure. But in terms of performance on the actual profit versus, let's say, $100,000 a day or $10 a day, I don't think that the performance really changes because, I don't think it changes at all.
Actually, you brought up a very good point. I have a question about the fees, right? That the exchanges charge. So, for example, in Forex, a lot of people are focusing on US dollar versus euro, right?
Yep.
Because there's so much competition, so the fees were very, very tiny. Like it was, 10,000. I forgot what it was. It was in pips. It was very, very little, basically.
Yeah.
And as soon as any profit you make, so the reasons against trading a lot was that you really have to be right a lot, because otherwise, if you just get a skim a little bit, it takes the damn, the fees are eating up all your profits, so it doesn't work. So I know, for example, for Bitcoin, the price of putting a trade in is pretty damn high.
Yeah.
So you really have to be right. You really have to make a really good bet and make a lot of money, because otherwise, if you just fight back and forth, it's gonna kill your profits completely. The fees are gonna kill your profits. How is that in like cryptos in general? Like
I
Bitcoin
just showed you right here.
else.
If you look at the crypto exchange review on the discounting of your, let's say you trade only Bitcoin, so your fees will be based upon how much Bitcoin you're putting at risk. And BNB's Binance coin. So your fees will drop and the more volume you trade. But the thing is that I guess your previous question, what you're just asking now, will the performance of the coin or crypto coin you're trading, will it change? Is that what you're asking? I just want to make sure I understand.
Well, what I'm asking is this: let's say I have only $1,000 in there, right? Which is a tenth of a Bitcoin. I mean, it's not 10 grand, but let's say for the sake of round numbers. So let's say I have 1,000. So I have to. And let's say if they charge, hey, you know what? A transaction would be to sell that would be, or to buy that would be $30 worth. So I really have to make out of 1,000. I really have to go up at least 0.3% just to cover the damn fee that they're going to charge me. And if it's going in and out, that's 0.6%, which is huge, right? I mean, I'm making these numbers up, but I was curious how the fees are like right now. Like, what do you see?
Okay, so. Right now, this is Binance, so they're one of the lower ones, 0.1%.
But that's if you have 500 Bitcoin, some crazy amount like that. Let's say
you could trade anything. They're trading that in Binance coin when you convert it back, so it's going to be 1.1%. It's very minimal.
What's a Binance coin?
Binance coin is. Let me go back to CoinMarketCap.
They have their own coin?
Yes, it's the exchange coin. Let me just see. Okay, so we got here. Yeah, so Binance Coin's very big. So it's the 8th largest coin out there on crypto.
So to buy the Binance coin first and then use Binance to trade against Bitcoin?
They do the automatic conversion as the commission fee. So if you trade in Bitcoin, they'll do the equivalent of that in Bitcoin, convert it into Binance coin, and then convert that total amount in Binance coin and charge 0.1%. Make sense?
So does that mean that I'm having a hard time grasping? So does that mean that, let's say if I want to go to US dollars to BTC, and if I go through Binance coin, that means that overall transaction to buy $1,000 worth of Bitcoin is going to be 0.1%?
Yeah, but they'll convert that into Binance coin. And then charge.
So at the end, I will not have Bitcoin. I will have an equivalence of Bitcoin in Binance coin.
Yeah, well, they'll always charge in Binance coin. So they'll do the conversion on the fly to Binance coin to calculate what the charge will be.
Oh, I see. So it's almost like their version of a credit.
Yeah. You have to understand the key difference between an exchange and a broker. Forex broker, hang on. The key is that you'll have in Forex. From the API side, you'll get an ID for the position. Okay? You have a position, you enter in the market, does this conversion, let's say in the US dollar, you get out, and there's another commission fee to get out. Okay?
Okay.
That's a broker. Interactive brokers, Forex brokers like Oanda, whoever, are like that. Now we're dealing with an exchange. Okay? So what you're doing is, let's say you trade over 5 different crypto coins, okay? And one of them's Bitcoin, the other one's Ethereum. You're essentially buying an Ethereum, you're going to get hit on that fee. So the big mind alpha, as I call it, is that when you put not a position in, you're buying and selling the actual crypto. Do you understand?
Okay.
So when you buy the crypto, there's no transaction, there's no position ID for that trade, because you're buying you're buying that whatever the coin is, and then they take the total of that, convert it to BNB, and then charge a fee based on that. So when you want to sell that crypto, it goes the other way, where they'll still charge the fee in Binance Coin, but it's only 0.1%.
Okay, so I'm still holding. So let's say if I'm buying, I'm still holding Bitcoin, but I'm paying them in Binance Coin.
Right, right.
But what about Bitcoin blockchain network to begin with? Because they're charging a fee. You're saying the Binance takes care of that behind the scenes?
Yes. So when you look at your trading panel, there'll be a fee, and it'll be in BNB.
Got it. So that's a lot of crap to keep in your head.
Yeah. But that's how the crypto exchanges work.
Oh, gotcha. Because I know Kraken and everything else, you just go direct, like you just pick a position. So as long as you load, okay, you have Bitcoin here. Here's all the here's all the pairs that start with BTC or end with BTC, whatever.
Right.
From one to another. And you would recommend trading on Binance, going to API to Binance versus Kraken?
The thing is with Binance right now, it's changed, right? For the U.S. market, Binance pulled out, but now they've relaunched as Binance.us, right?
That's probably going to be, is it much different regulation-wise?
Yeah, they have to stay compliant with U.S. regulation.
What are the differences? Like, what are the differences?
Well, the difference is if you go to Binance, right, and you were trading out of Asia as a non-American, you will have access to a lot more coins. You'll have access to a couple of hundred coins. But with the Binance US, you will only have access to maybe, I think it's 18 coins.
I mean, that's more than enough to begin, right? Unless you have a great system
and that's fine. That's fine, because the problem is there's only 5 coins you'll trade with anyways, maybe 10. And the best way to do that is to look at Kraken. Okay, let me pull up Kraken here and just trade. It depends on your strategy. If you're mean reverting, yes, you could trade crypto against crypto. But my case is I'm trading crypto against a fiat currency, which is US dollar.
So basically you go all in or all out, meaning like you get the money out, actually, not intermediates. So you don't keep the money in exchanges.
Do I keep my money in the exchange? Yes, you do.
No, I'm saying you go right out. So if you trade, you recommend going, okay, get your dollar kind of thing.
It depends on your strategy. If it's momentum based, then yes, you want to trade against a fiat currency. If it's crypto again, or it's a mean reverting strategy like pair trading, then you trade against a fiat currency. It's to reduce the volatility.
What's a mean reverting strategy?
Like pair trading, like you short one, you long the another one, and then the position. You're hoping that maybe the position will revert back to the mean, so you may buy at the top, and as it reverts back to the mean, that'd be a shorting opportunity, or the reverse for a longing opportunity. So it depends. Okay. It depends upon what you're trading.
Wow, okay. This is so much information.
You have any videos on that?
It's a lot of information, but what I would tell you,
it's immensely appreciated. By the way, for the record, this has been great.
No problem.
So grateful.
Come back next week. We can have the same conversation on different set of topics. But
hello?
Yeah, I'm here. We're here.
I'm sorry. Do you have any videos on that? On reverting the mean?
On the what?
What you just said. You're talking about this mean.
Mean reverting?
Yeah, mean reverting.
No, I don't have any. Not videos pertaining to this stuff. I have in the can a pair trading strategy I'm working on right now.
Oh.
Okay, and I have nothing yet because I'm not setting it into the market. I'm just kind of playing with the data. It looks good, but right now the one that looks good is the momentum one. But you see here, this is Kraken, right? This is Crypto Watch. So you have certain coins like Bitcoin in US dollar, but then on the other hand, you could have like Ethereum in Bitcoin or Ripple in Bitcoin. So those are two separate types, depending upon your strategy. If you want to trade, as I said, a momentum-based strategy, then you use something that would be in US dollar. But if it's mean reverting, yeah, you want it crypto to crypto. Because mean reverting, 80% of your calls will be profitable. Make sense?
That's a huge number.
Yeah, it is. And that comes from a very experienced crypto automated trader. And that's the stats that he has.
Wow.
But there's a higher chance that the momentum-based trading will fail. But to get a working mean reverting strategy is pretty difficult. And if you trade on something like BitMEX, which is like a futures exchange, but for crypto, and it's mean reverting, you can make a lot of money, but getting it to that point where it's working consistently is a very, very difficult thing to do. But
so what you are saying is that there is no guarantees and the market is volatile. So strategy works 1 week, next week. So it's like it is a lot of work. It's not something you can go on vacation for a month and banking. You gotta like watch this like a baby, basically.
What you're asking for is a set and forget type of strategy, right?
And you're saying that doesn't really, based on everything you know, that doesn't really exist.
No, I don't think so. Like you got to watch the markets, and you have to have as many potential strategies to work from, because any strategy you come up with is valid. It will make money, but it depends on where the market regime's at. If the market regime says, yes, Bitcoin's going up for the next 2 months, yeah, momentum-based strategies will work. But if you're in a position where you're at now, where Bitcoin is in a range-bound trading environment, that's when you have to switch it over to a mean reverting. Because you're not going to, Bitcoin's not consistently going up. The only way to make money at it is when you're trading on when it reverts one way or the other way, but it reverts back to its mean. And that's when you trade mean reverting. And you can still make good money in a range-bound trading environment, if that makes sense.
Got it. Okay.
But that's what I'm saying, is you have different strategies for different purposes, but it really depends upon the trading condition. Because if it's momentum, it's always driven up, momentum-based, then you could trade a momentum strategy, because you're banking on the price to consistently go up in a period of time, be it a couple of weeks, a couple of months. Your momentum strategy will work. But once it goes into a mean reversion or a range-bound environment, that momentum strategy will not work. It may work if you start to scalp, but if you have a mean reverting strategy in a range-bound environment, it can make money on the long or the short, depending upon the direction of the price. You follow?
And for those, you have to hold it a little further, right? You can't just bail in and out.
I can't say with definitive answers to say it's one or the other. It depends on your time frame and what your time horizon will be on how long you want to hold the position. If you're wanting to only, let's say, do equivalent of a sub 5 minute trade, then yeah, you would do mean reversion and more mean reversion as well.
Okay.
That's what I'm saying. You really got to understand what time frame, what instrument, and what kind of strategy it is for the market condition you want to trade.
Got it. For the Python version 3 course, when were you thinking of? But the reason I'm asking is I'm about to order. Actually, I tried ordering. It said card has insufficient funds, but it has like a $400 limit on the specific virtual one.
Right.
But we can talk about that later, so
sure.
Whoever else is here is not impacted. But I was wondering, for TensorFlow 2, when were you looking? I mean, that's definitely something that's super curious, and especially if you're saying that that's where everything's going to go, and that's going to be like a big player when it comes to automated trading. When were you looking to add that to the course? So
there's different ways to different ways to trade. Right now, I'm cryptocurrency. I only focus on momentum, and I only long. Okay, so there's other factors I could consider right now before even factoring in machine learning. I could do a strategy based on pair trading. I could do a strategy on shorting and longing, and treat it differently with crypto and Forex. So there's all these different factors I could look at before I start attacking machine learning. But
do you use machine learning in your work?
Not yet, but I do think there is definitely a pressing need to use machine learning for things like portfolio optimization and position sizing. That's where I think machine learning comes in. So right now with my systems that I've got set up, I record all the data. So then I have a really good set of data I can feed and simulate a model, and hopefully train a model off of that data, and then work off some kind of model for the portfolio optimization or the position sizing.
So you have a way to backtest, basically.
Yeah,
that's correct terminology.
Well, it is back testing because I am recording and logging the data. So there is a form of back testing. The problem with back testing the traditional way through something like Backtester or even Quantopian, what a lot of people will do is they'll just back test the most extreme down moves to see if their model will work. And they'll do it in such a way where they'll trick themselves to thinking it works, and then they think it works because it's profitable somehow. They put it in the market, deploy it in the market, and it still doesn't work. The reason it doesn't work is because it's not simulating against real trading data. You're a coder. You know what I'm talking about. When you build a solution, you have to stress test the code that you're developing, right? Meaning when you stress test it, you're testing it against real environments, right?
But what's off? Is it the timing, or is it the volume? Is it the delays? Because if someone tells you, hey, at 3 p.m. the price was this, at 3:01 p.m. the price was this. Theoretically, if you do this live, you should be able to handle it, right? Or
yes, to answer your question, with all the options you just gave, it's all of the above. Because I firmly believe that the markets are random. There's a random walk theory, and it's very difficult to trade in that environment. If you use a momentum-based strategy to trade in a random walk environment, to build a strategy or a model or an algorithm for that is very difficult. And instead of blowing your brains out and wasting a lot of your time to backtest it, quote unquote, you're better off just to come up with very simple concepts with trading indicators that you believe will work, and just develop with real market data and see what happens. Does that make sense?
So you're saying basically just develop something and sit there, hey, you know what, if I put this out right now, is it good enough?
Yeah, and it may work. But as I said, when it works, it works. But then the market will change and it no longer works. Doesn't mean that this strategy is no longer invalid. It's just that the trading conditions at that time or the market regime is not optimal for that strategy. That's why.
Is there, but for backtesting, I was curious because this way I'm like, hey, if you replay it against all the data for the past year, I'm like, okay, if this thing was unsupervised and it ran for the past, 10 months, what is it, 10th? Yeah, it is. Yeah. Like, okay, it would have been profitable, April would have been great, May would have been great, June would have sucked.
I'll give you an example. At this time, I'm going to be honest, I was very lucky to see the kind of performance I'm going to show you. And I'm going to show you what happened. So if I look up two crypto coins, and this is all purely I found by luck on Binance, when I was on Binance, this chart will blow your mind, okay? The markets were not doing too well in crypto, but when you look at this trading pair, okay, let me just get, let's say, I'm going to pull up the 5 year. Okay, see what happens here between December 19 right here up until April. That's a solid run up where no matter what I did, I made money with this combination of Litecoin. But look where Litecoin has performed since that April. We're talking April 1st. It's gone into either losing money or a range bound. Okay, So what I'm saying is I developed, by luck, a trading algorithm that went from here to here, and I thought I was a genius. You know what I mean? Mm-hmm. And the thing was, it broke down right here in April. And then that same trading model was useless. I was making quite a bit when this momentum happened between December and April. Okay? But now if I take the same trading model and apply it from April to here, what's going to happen is going to lose money. Okay? But if I develop the mean reverting strategy somewhat, I may have made a little money in around here. Depending upon my time frame, I would have made money with a mean reverting strategy. Okay, so that's one example. What I mean is you build a momentum-based strategy and it works great from here to here, and beyond April, come mid-April, you're losing money, like badly. So that strategy is now, at this point, no good. Not saying it's invalid, but maybe one day from this point, that same strategy will be applicable for this run-up.
So that's a great trick. It's like, how do you know whatever you have right now is going to make you money before now and tomorrow?
Right, and that's what I'm trying to tell you, is that's why you have multiple strategies for multiple trading conditions. I can show you another one as well. So,
how do you recognize those trading conditions?
Huh?
How do you recognize those trading conditions?
I'm going to be honest, it's by luck. I'm not going to lie to you. Okay, so here's another example. This is BNB. This is Binance Coin against Ethereum. It's the same idea. Because Binance Coin was the same strategy, but look at this run-up. So again, from early this year, it did really well up until here. That's when it peaked. So here is I'm going, okay, is the strategy still valid? Do I still run it? What happens? Then I turn it off, but yet still ran up a little bit. But since then, in around late April, that strategy is useless to me. So this is what I'm trying to tell you is if you build a strategy that works, there's only going to be a period of time where it's valid and working. And I'm not saying throw it away, but you're going to have to start working on a new strategy for April till today. And that's all it's been doing is just range bound all that time.
So there is work. There's no magic bullet. There's no.
No, that's what I'm trying to tell you. There is no. Like I said, if I was to sit here and say I got a new strategy that does this from early December till April or even until May or whenever that broke down, I'm a genius. I'm going to make money forever. You won't make money forever because now that same strategy that I would trade, it will lose money or may at best break even because that time period, that market regime has switched. And just right around here, that's when Bitcoin was starting to really take off until about another month, till about June, okay? So the momentum was good, but somewhere along the line, I have to have a mean reversion strategy that will work in this trading environment when it goes range bound, okay? And that's what I'm trying to tell you, to have that skill to be able to find these patterns. And again, backtesting is not going to see this because if you backtest this period between December and April, you go, oh, golly gee, I got a great strategy. Then you deploy it in the market here. Now that same strategy that you quote unquote backtested no longer works. See what I'm saying?
No, I see what you're saying. I wonder if there's a way to kind of like think like longer term. So if you have something that, although if you lose something, its losses are way worse than gains. Because if you lose a little bit, now your position's way lower. Now if you even gain the same percentage, you're still behind.
Right. That's why if you talk to the trading firms, they're probably going to have maybe 10, 20 strategies for different markets, for different market regimes to consistently profit in. So here, if they're just trading BNB and Ethereum, they can make money from here, from December till about April. But then they know, just maybe, it may go into this range-bound mode and you could make money when it mean reverts. Because you can see here, it's mean reverting right about at this level on the x-axis. So you can make money there, but you got to know when it's starting to mean revert. And that's the same instrument, BNB and Ethereum. So you have two strategies since the beginning of the year where you could be making money. You have a momentum base for a certain period of time, and then after April, it switches into a mean reverting kind of market regime.
Got it. Brian, I have to interrupt you because my battery is dying, so
No,
I have to run. Before that, I do want to buy the Python v3 course.
Okay.
But I generated a card, but it does not go through. I don't want to waste the other guy's time. Is there a way to reach you where we can figure this out?
Yeah.
What's the way to contact you?
Just email me. If you got problems, we'll figure it out.
Okay, I'll email you right now, and I would love to talk to you again.
Do you take PayPal?
I can do PayPal. I can do
I can do PayPal. I could send you a manual invoice, and I can plug you in there that way as well. Okay, great. Yeah, just use my email. It's plugged into PayPal. Okay, well, just email me your PayPal address. If it's your email it to me, and I'll set up a PayPal invoice for you. Okay, I think my email is the one that works there, the one that we were emailing about. I'm just putting a request to you. If you could just send it to me, because I may forget, and I don't want to do that to you. Oh, no worries. I'll do it right now then, before my computer dies. Okay. Yeah. Thank you so much. No problem, much. I appreciate it. Thank you. I'm here next week if you want. Great. I hope to talk to you before that. So. Okay, no problem. All right. Have a good night. Thanks for coming out, man. Thanks. HFPTC, are you there? HFPTC, are you there? Okay, hang on. I'm going to do a chat.
Can you hear me?
Yeah, I can.
Okay, I put it on mute.
No problem.
But my question is, so you're saying that with Forex, if they see your stop loss and you take profit, they'll play around with it?
They can. I'm not saying they will, but they can. And most likely they will. But if it's a U.S.-based, well, I should say, if they operate in the U.S., chances are they shouldn't.
Okay, but you got to come up with a bunch of strategies dealing with them.
Nothing guarantees you that. That's the problem.
Well, that's true. But now, you're saying there's a way you can scan the currency market to find out which ones are hot for that day?
Yes.
Yes. Okay, how would I do that?
Well, it depends upon your trading time frame. So let's say in my case, I've got a script. I'll show you. I have a script here in Awanda. So this will work with any broker, any asset.
Okay.
So what I do is I've got here, let me just show you here. So I'll load up my Awanda. Okay. So I have this script called most profitable FX. And basically what it does, it'll generate a spreadsheet. And let me show you that spreadsheet. It's pretty basic. No surprises, or shouldn't be a surprise.
It's on Nanda, correct?
No, this will work on anything. It's just using the TA lib. Here, I'll show you. So here, let me just go to the right directory here. Man, I have so much stuff I lose track.
It's okay, but I thought that. No, that's true because I hear whatever industry, but it's as per broker, not so much across the brokerages.
No, well, what I'm going to show you right now can be applied to any broker, any instruments, universal. So let me just show you how it works. So if you are using that TA lib that you know about, so I have here, these are all the assets that I can watch. So these are all the CFDs, for example. In here, it will break out the hourly change, so it will download the hourly data, right? So we'll download the hourly data, those prices. In there, I can use ROCP, which I use all the time, rate of change percentage. And then you're able to calculate the average hourly change for each of these assets. This is basically the scanner. This is how it works. So you calculate a certain subset of number of hours you want to calculate the average hourly change. You with me so far?
Yes, I am.
Okay, so if you were to do this in a data frame in Python as an example, let me just do a sort here. So in here, this you could do internally in Python with a data frame. Okay, so in here, I've got, I'm going to sort on, oh man. Okay, so I have my columns. I'm going to sort on, let's say hourly change, right? So I want the largest to smallest.
Smallest, right.
So you know right off the bat, this is what I did in that video today. I know right now that the gold against US dollar is the fastest mover right now, right? Because it's has the highest hourly change. But at the same time, I want to know what the 3-hour change is as well. Okay? And then you calculate for each one of those instruments that you're interested in, and you calculate using the ROCP. And all you got to do with the TA lib in that course. So if you do, let's say a search for TA lib ROCP, all you need to feed it.
Okay, I'll just watch this tomorrow.
Yeah, I mean it's not too difficult. So if I go TA lib ROCP just to show you what you need to right here.
Okay.
This is a momentum-based indicator. Okay.
Mm-hmm.
So there's different ones. Now there's different ones. Okay, so there's one called rate of change, which is the price divided by the previous price minus 1 to give you the percentage times 100. Right?
Right.
See, the problem is when you compare it against other instruments in that asset class, the problem is that this rate of change here, this rate of change, we're calling it rate of change only, will be not normalized. You know what that means?
Yes.
Yeah. Okay, so it's not normalized. It's not going to be a true reflection of the rate of change because it's based upon price. So to normalize is to use rate of change percent because it's now relative to the percentage move, not the price move.
Gotcha.
Okay, so it's price minus the previous price divided by the previous price. So it's now a percent. So that's what I'm using here. This is the hourly move on percent for 3-hour, 1 hour, right? And the other thing I factor in on the entry is very simple. I'm also using rate of change to measure the volatility. So if I know, like in here, that there's negative numbers in here, that means that we have certain hours that went negative, meaning it's highly volatile.
Okay.
Right. So you're trying to get a instrument that's moving in a high level, but at the same time you want to make sure that it's not volatile, meaning it's going to have a negative hourly bar that will be excessively negative. And the reason why is because next time you put on a position, you have to ask yourself, will that position go against me? Because there may be a probability that within the next hour, however long you hold that position, you may have a whipsaw, meaning that position will go against you, meaning you will lose money.
Right.
So you want to take a trade where it is moving with a high rate of change, percentage-wise, but at the same time that does not have any negative hourly moves. Follow me?
Gotcha.
Simple. So you're looking for high movers, but with low hourly moves that are somewhat negative. Because you have too many that are negative, meaning there's two things that will be why it's negative. Because the timing that you're looking at this thing is too late on the spike, or it's just overall it's volatile.
You know, I'm gonna tell you one thing I found is with Forex, it seems like when the markets are closed, they tend to you don't have so many problems with whipsaws. I noticed that.
Yeah, I know you're trading on breakouts, so if you want...
No, I know that. Your breakout's another issue. I'm talking about like Sunday. And you catch it from 11 o'clock going to maybe 2 in the morning before your market opens.
Yep.
You don't find as many whipsaws. It seems like it's just smooth up or smooth down.
Right. That's because you have less participants in the market.
Also late at night.
Well, the real time to trade in Forex is just before when London opens. So that would be Eastern Standard Time. That would be roughly 4 a.m., let's say, or 5
It's
a.m.,
open then.
a couple hours before that. So like between 1, 2 a.m. till about 4 a.m. the next hour. And then as the New York opens, that's another period of time you could trade as well. Any other time, it's not worthwhile because Asia just doesn't have the volume that the UK or New York has.
Right. That and the breakouts.
Well, that is the breakout. The opening time.
The opening breakout. I'm talking about like you have news type thing.
Well, yeah, you could trade if, like, for instance, if we have a paper called the Globe Mail or Wall Street Journal for the U.S. And you know, in there right now being Monday or Sunday, you can look at that and it'll tell you what's happening in the week. Okay, so that's going to tell you the calendar events. So, for instance,
you can get it from investing.com.
Yeah. Oanda has its own calendar events as well. So if you trade off that those are going to be predictable trades.
Yeah.
Right. So like I know Oanda has that. So let's say the economic calendar. You know, you could program this calendar and trade off of it. It's predictable. Okay. So, as an example, last week when the numbers came out for on Friday, where the employee data came out and it was good, what happened to the market? It went up. Or a few days prior, the PMI, the manufacturing index, was down, and that's when the markets got killed. So if you know you get those calls right, and that obviously affects the U.S. dollar, you get those calls right, then chances are you could multiply those trading opportunities with other pairs.
Okay.
So that's one way to do it. I don't trade off of calendar right now. I just trade off of pure price. Just pure price. That's it.
Okay, so now, my next question is, you're saying run this script every what against there?
Well, it depends on the calendar because, like for instance, if you go to Dukas Copy, they have a better calendar. So if you look at Dukas Copy calendar, let me see if I got. So online economic indicator, Dukas Copy, it will tell you exactly what's going on globally. So here, you could do, let's say, a web scraping of some kind, and here's got all the events. Leading economic index for Japanese yen. Well, if it's good, then you know the Japanese yen's going to move up. Same with the euro, same with the franc, British pound, so on and so forth. And that will tell you exactly when that comes out and what it will determine as the direction. So you have the impact of it if it's going to move the price. So right here's a high impact for U.S. dollar producer price index to food. And if you get that call right, chances are you may be able to profit off that with a high probability of it. That's why they put this little impact indicator in there.
Right. I think most of them have bulls, like one bull, two bull, three bulls in investing.com.
Right, but I'm just showing examples of what you can and how you can do it.
Dukas Copy, market watch. Okay.
Yeah. And it's all the major currencies, all like the big six.
So now, I want to make sure I have heard this right. You're saying that it's possible to be consistently profitable in Forex if they can't see a stop loss, they can't see a take profit, and you are, what else you mentioned?
They're trading off the calendar off of these events. That
the calendar. Something else you said.
What was it? Well, this is being recorded, so you can go through.
Yeah, I'll go back and look at it.
Yeah. I'm just trying to think of what I did. I mean,
I'm sorry. And you look at the actual. Look for the rate of change for that.
Yeah, that's right. Right. Yeah. So
this will be inside.
What's
that? Great British Pound. See that. BLE. And you have multiple strategies.
Yeah.
How many do you think you should have?
Well, depends upon the event. Right here, if you ended up scraping something like this and eventually recording it yourself every day, every week, you'll slowly get patterns out of this and be able to determine your own calendar and the impact that it'll have. And then you'll be able to figure out which one has a high impact to the ones that will really impact that currency, if it's US or Euro, and try to predict where that call will be for that calendar event, if that makes sense. This is just one way of doing it. And you know how you can do that? You can look at the futures market for these. So for instance, you could say, let's say, what would be a good one? So right here, Fed Chair Powell's speech happens at this time, okay? So you could look at the futures market, futures data, and see what's being lined up in the futures market for the US dollar. And if you know there's going to be more bids or calls on the options call, that will tell you what the professionals are doing, and they could make a call off of that, just off of that kind of data. Make sense? Still there? You there?
Can you hear me?
Yeah, I'm here. But
Okay. I'll let you hear me.
yeah.
Okay, so you're saying go to... How do I get that data for the...
Well, our good friend...
Options for the calls and the...
what you probably want to do is get the... well, I would recommend IQ feed.
You said that before several times.
Yeah, you'd have to get the IQ feed. I guess you could either do it off of options or futures data. So let's say you want US dollar options data. Let's see what exchange you would need. So for options symbols, for US dollar, looks like so let's say these contracts mess me up, but I think you could probably have sufficient data with the futures stuff. Hang on, give me a second here.
Yeah, I noticed that. Yeah.
So let me go back here and look at the...
But what he was saying, you're giving him his answer now, but the other guy, he got off the line.
Right. Well, hopefully he'll be able to watch this video, right?
Right.
So the one you would want is wherever the US dollar is as a future call, and use that. And whatever before that announcement comes up, you can get a pretty good idea on what the institutions are doing on that call using the futures data.
Right.
Because that's what they use for futures contracts. Is like when you read the news, like let's say on Bloomberg at 3 o'clock, 4 o'clock, there'll be like news items that come out. Here's what the U.S. futures markets are telling us for the day of tomorrow at 3, 4 o'clock, because all the institutions will probably have some kind of algorithm or a trading desk out of Asia or the UK setting up all their futures calls, and then that is used to see which way the markets will open the next day when it does open. That I see all the time. And they can do the same thing for the US dollar.
I gotta purchase this thing tomorrow.
Well, I think watching the markets like this is helpful. Another way to do it, if you were to do it with CFDs, you could kind of maybe do it as well. If you get, you can't do a CFD, so you won't be able to see this stuff. Actually, you could. Well, you can't trade CFDs, but your question is, can you see CFDs, the data? Because you may be able to use the data for CFDs on some of the major markets on the CFD side.
But my question is, if you're saying that you can pretty much look at where you're going between the calls and the puts, but what happens when the broker see you're doing certain patterns?
This is
they try to go against it.
Yeah, but this has nothing to do with the broker, because you're using a different data source.
Right, but they see that you're, you said that they can combat what you're doing from the stop loss and the
right. That's only if you're signaling to your broker what your stop loss and what your take profit will be.
they don't see it, they can't do anything?
Yeah, that's right.
So I can do this follow one strategy, look at which way it's going, and turn manually. I'm just saying this manually, but I don't really mean it manually. I know how to automate it.
Right.
And actually come up with the old one they cannot see.
Exactly.
And they can't stop it.
Right, because they're not going to trade against you. But once you use a stop loss or a trade, a take profit, and you signal that as part of the order, then yeah, they're going to know what you're going to be doing.
No, I'm not going to do that. I'll be shooting myself in the foot.
Right. That's why I'm always telling people when it comes to putting your orders, use something like Python, and then virtually have a stop loss and a take profit level that your system will track, but not let the broker know. That's why I use Fibonacci levels, because that's what you can use as your levels for the take profit and stop loss. So, right, let me show you as an example.
Instead of you doing USD dollar every day, you mean USD, Euro USD every day. That's pretty predictable. But if you're looking at this, you see which one is using your script on which one's moving for the past hour.
Yeah. Which one you're interested in? Hey, guy. Excuse me. You're interested in crypto, right?
I'm going to do it eventually.
Well, which one are you?
I'm just saying I got to work on this thing tomorrow. I have time. But I came up. This I sent you an email today regarding the harmonics, and I used it against the euro and the dollar after it opened yesterday. And I said, wow, this is really slick. It's catching it every clip.
Yeah, pretty well.
But like what you just said, it changes. Conditions changes every day. So when I look at this will give you you can look in a way into the future. What is about to happen? Which currency is the one that's...
Which harmonics are you using? The one from Motorwave?
No, I haven't gotten to that. I'm doing that tomorrow in the morning. I'm starting with it.
But you, so okay.
Yeah, I just downloaded the ones just playing with it. I'm like, I can have it modified if I want to.
Yeah, you could. Yeah. It just depends upon what kind of harmonic you're generating. But harmonics are really good.
I'm using it from an hour to 30 minutes.
Okay.
And then again, hour, 30 minutes, 15 minutes. If the 15 minute can give me a time for, give me a direction it's going, great. If it can't, it's null and void. That was my first thing. The second thing I was going to do was do it 2 to 3 times a week. That's it.
Yeah.
At 9%. But you're saying you can't do that either.
Well, you can.
Well, this information you can.
Yeah, you can, because you're making short-term calls and your position is only going to be on for maybe an hour or 2 hours. But if you're doing a buy and hold kind of strategy, yeah, you can.
No, that's too dangerous.
Right. But as I said, like with what I was showing with the Litecoin and Ethereum, it was just a consistent momentum up between December and April.
Right.
And that was a gimme kind of trade, but it broke down after April. But in terms of levels, when you're asking about the take profit stop loss, this is one way to do it. I think we've talked about this. You were part of the conversation. So here, let's say New Zealand against U.S. dollar. This is one of the stronger ones right now. Is you could just, this is 14 days hourly data. So right here, you can see right here, this is the 500. So this is your level that you want to use to confirm that maybe, just maybe, you have momentum in the market to drive up the price. Okay?
Right.
So once you break through that 500 level and it stays above the 500 level, you can use this right here as your entry, the 618 Fibonacci level. And then your take profit would be just right here at the 786. Because when you look at this time and time again, usually, and don't ask me, it's a law of nature, is that you confirm your entry at 618 and then take profit at 718. You don't have to let the broker know this trade.
Yes.
Because you could calculate it through your system.
Okay.
By doing these Fibonacci retracement. And then on the take profit, or sorry, on the downside, on the stop loss, all you got to do is when you make your entry is you just use average true range and maybe set your average true range multiplier at 1 or maybe half, And when the price drops below that ATR stop loss, without question, you just get out. And then that will minimize your loss. Okay?
Wow.
But here's where the problem is. You could do this 24/7, 7 days a week. The problem is when you run a strategy like this 24/7, 24 hours a day, you're probably going to have a much higher probability of having losses.
Yeah, I would never do that.
Right. So that's why I say for your day, have targets for the day. So you have a 1% move on the total number of positions. They net out at 1%, shut down the system, and take a 1% profit for the day, and then start up your system for the next day. Because that way you're not going to run into a situation where you're overtrading, and chances are if you keep trading beyond that 1% hit level, then you're going to start taking losses, and you're going to no longer be able to maintain that 1% level. And it's the same on the downside too, because if you're taking too many hits on the losses, that will then start to eat into your equity curve, which what you don't want. So you figure out on how many hits you could take for a daily number of losses, and then once you hit too many losses, just shut down the system and start over again.
Of course you would. Now, do I have access to that script from your website?
Yeah, which one?
The one where it looks at the rate of change.
The rate of change?
When you just showed me the one
yeah,
I
can show you exactly where to go. Where's my little blurb down here? I'll go into the back end here. So, because I'm logged in, what you want to look at is first understand this TA lib, okay? Because the TA lib is very important to understand.
Mm-hmm.
And then what you're doing is, with the TA lib, you want to learn that TA lib, the technical analysis part.
Okay.
So that would be right here. Is this the one?
Uh-huh.
Or is it, hang on here. I'll find it. It's in here somewhere. Yeah, it's in here somewhere. Outlook. Okay, so this is a database. You're right here. This one, module 5. So if you understand this module,
Mm-hmm.
it will walk you through the TA lib and how it works. Because first you got to know how to get the closing price, like the open, high, low, close.
Right.
So if you're doing it through crypto, that's what the CCXT will show you, the CCXT Python package.
Okay.
And what you're doing is you're feeding in the open, high, low, close, depending upon what indicator. I think it's the closing price. I just showed you the parameters needed for it.
Okay.
Which is, where is it? Okay, let me just find it.
So just general conversation. He's saying that he wants a strategy. He just throws up and just every day is going to produce something and it's going to hang out there for hours and hours.
It will, but not forever. It'll break down at some point.
No, I know. I can tell you that's not going to happen.
I know that. But
a lot of people like 15, 20 minutes in, you're out, done.
Right. But I know that, you know that, but there's people out there that are too disillusioned at thinking it does exist. It doesn't.
I never heard him say that. I was just saying him say, oh, the next day is not going to be winning.
Well, it could win, but with that,
it's going to win. It's going to win, but it's not going to continuously stop.
Not forever. It could. It could for a couple of weeks or a couple of months. But that same strategy on that same instrument will break down at some point.
Mm-hmm.
Right?
Right.
But regarding the...
there's another trick I wanted to tell him. I'll tell him next time. Maybe we're going to hear this anyway.
Yeah.
Is saying he said he wanted to start out with $600, what you want to do is 9% or 10%, 9% or 7 or 8% is will give you, if you have 100, so you take your account up to 600 because you got the whipsaws.
Yep.
And you make $50 on 100 and forget about the other 5 is just to cover you. That's one way you're looking at it.
Yep.
You know, so then in turn, every day you're making, say, a certain percentage off the 600, but off that 100, which is going to constantly keep growing, you just don't, you got to forget about the remaining 500 is there, and it will eventually be producing 50% on that 100.
Yeah, with the compounded, right?
Right. You're trying to thin it out like that, just dropping 100 is extremely dangerous. You're going to lose it.
Yeah, well, that's the thing, because it depends upon market conditions, but that's the idea of portfolio optimization. Because, or are you familiar with Kelly criterion?
Never heard of it.
Okay, let me show you. So if you use the Kelly criterion, this is what it does exactly. So let's say you're trading. Let me pull up Investopedia. It's probably the best. So what you do is it's like betting, right?
Okay.
So right here, the profit and loss ratio. Yeah, here. Man, let me go back to Google. I don't have my backspace working for some reason. So if I do the Kelly criterion with Investopedia, I'll show you the definition of what it is. So what it is, it's a very basic risk management technique.
Mm-hmm.
So what it does, it will take the percentage of winners and take the percentage of losers. So depending upon basically your winning ratio, if you have a higher winning ratio, what you can do each trading session is you can increase the amount of capital that you'll allocate each day. So if you have a range, let's say 3 days, 4 days, maybe 5 days of winning rate, like wins for the day, you can keep adding the next day your higher daily allocation out of your portfolio to trade. Right. So, but if you have, on the other hand, a sudden number of losses, it will automatically reduce the amount of capital that you allocate, so it will protect your account.
Okay.
Because it's like this. If you were a trader and you had a boss and they deploy how much capital you can trade every day based upon your trading performance,
Right.
if you're winning, they'll allocate more capital, right? So once you start losing, then they'll tighten up how much capital they'll deploy to you on the next trading day, because now you're maybe going into a losing period. It's just a way to protect your account and make sure you don't blow it up.
Right.
So
that's not martingale.
What's that?
That's not martingale. Martingale, what it actually is doing is it's like a ratio between your losses and your wins.
Yeah, right.
Oh, you're familiar? Okay.
Yeah, I think so. Yeah, this one's a little better because it's a lot simpler.
Right.
So it will factor in your daily trading performance.
Okay.
And then I think there's a certain ratio once you hit, you reduce the amount you allocate for the next day.
Well, this sounds great. I'm gonna go through this those chapters 4 and 5.
Yep.
Over TA-Lib. I'm gonna use that as a criteria. To use that, the hour, the 30-minute, 15-minute, which is all consistent.
Yep.
And plus the info. I'm trying to figure out a way to get the info from IQ feed. See if I can plug it into the script. To be another condition statement. I'm gonna try to see if it can find that currency.
Right.
I probably could use that. It gives a percentage plus. Now you have another condition, which is actual the rate of change.
Percentage. You gotta make sure. Rate of change percentage.
Right. Okay, rate of change percentage. Use that. It's another one.
Yes. I have about 3 conditions. I have the volatility measurement.
Right.
You want the lowest volatility using rate of change, but you measure that and you figure out your percentage of what you're willing to tolerate, and then you use your ROCP, rate of change percentage, looking at the raw data for the potential entry. You could also use RSI. And there's a few other ones as well. I don't have them right in front of me, but ROCP, RSI are pretty well really good ones. Plus, don't forget, we haven't talked about tonight on the buy versus the bid versus ask as well.
You mean the ratio?
Yes, the bid versus ask. Yeah.
Yeah, but the problem is, let me see how you get the information on Forex. So Fernando, you can get it.
Right. You mean for Forex?
You can't watch another conditional statement. You can get it.
You can through Awanda, the API. Yeah, you can.
Yeah, but how do you look at another brokerage, though?
That's the problem.
Right, that's what I'm saying.
The only one I know of,
I can figure that out.
The only one I know of right now is Awanda.
Right.
Through Python. I mean, I know. Go ahead.
You can get all this information into one. You still be against using a 500 to 1, 1 to 500 leverage.
I'm not against it. Just if you're willing to make that kind of gamble, and if you lose, you will blow out your trading account very quickly.
Right.
If you know for sure that you got a call that's definitively a winner, 500 to 1, and you know that for sure, yeah, by all means use it. But I know the only region in the world that still has those crazy margins is Australia. But they had in the summer announced that they're cracking down on that for the Australian market. So the idea of what we've talked about in the past about these crazy margin levels, that's going to go by the way of the dodo. Like these crazy margins are no longer going to exist. And if they do, you're going to be trading in Russian or Middle Eastern or Caribbean Forex brokers that are not regulated. And they are definitely going to be cheating you out.
You said they definitely will?
Definitely, yeah. Because they're not regulated. That's why they're in these weird markets.
Oh.
Because if they're in these weird markets, they're not being regulated.
Oh, I see your point now.
You see what I'm saying?
Right, so you're saying never mess with them at all.
I wouldn't even touch them.
Wow.
Because I pull up a couple, I just don't want the wingnuts to come after me illegally, right?
Mm-hmm.
But just type in Russia, MetaTrader, Forex broker, and dollars to donuts will probably cheat you. Will cheat you out.
I'll take a look at this on the end of the thing tomorrow. Then. Definitely.
I think I won't say it's 100% safe, but out of all the brokers that I've seen, especially in the U.S., they should be okay. I'm not saying they are or not. And the other thing I like about it, when at least you can use, and they support the Python API.
Right. Also, too, what's the thing? ID has currency trading within its.
You haven't seen the latest news on Interactive Brokers on their on their Forex. Let me pull it up.
Oh.
Let me show you. Interactive Brokers Forex.
What happened to them?
Okay, so if I go under news, you'll see Interactive loses $17 million to retail FX deposits. And we'll look at it. I just saw the headline.
Right.
But it's people are not trading through Forex. I think there's a lot of reasons. One of the big reasons is the volatility is not as crazy, which means there's not a lot of trading opportunity. And the other big one is probably the what do you call crypto as well is really hurting them. So I don't know if you can read this. I'll put this in the chat for you. You out there? So,
wow.
Yeah, this is big news. Lot of Forex brokers, like, look at even Awanda lost $3 million. That's a lot of money, man.
It is.
But when you look at the crypto markets, it's always growing. Like I think I confirmed it. I was at a Toronto FXCM event, and the guy didn't believe me that like overall global Forex trading volume was dropping. He didn't believe me, so some higher up guy came in and confirmed it. And a lot of it right now is because of crypto. It's competition. Crypto is competition to Forex.
Mm-hmm.
You know what I mean?
Something good may come out of it.
With a crypto?
I'm saying with Forex, they may clean it up.
Possibly. But those are the two reasons why Forex volumes are dropping. Not only that, but why people are pulling out their deposits in the Forex market.
So now you're saying that Orlando is 50 to 1, correct?
I think it's the highest for Orlando, the leverage.
Right.
Oh, I don't think it's that high. I think it's like maybe 12 or 15.
Oh my God.
It's nothing.
You gotta do quite a few trades.
Yeah, but that's regulation has stepped in to prevent you from. They're protecting you from yourself. Let me see. Oanda margin. I may get the Canadian site.
Mm-hmm.
Yeah, 20 to 1. For
20 to 1.
Offers maximum leverage for major currency pairs and 20 to 1 for minor currency. So I don't know if that's for Canadian margin requirements, but let me see USA. It might not be as high.
Right.
US margin. Yeah, I don't think it's as high. No. Is this what I'm seeing here? That's not very high, man. 10%, 12%. So this is the NFA, National Futures Association, on what your trading margin can be. Yeah, it's not very high.
So that's 3% of what? Tip?
I might have it wrong here. Let me see if the leverage. Let me just make sure. USA leverage. Yeah, it's still that's what it looks like. No, right here. No, here. Yeah, it's 50. It's the same. 50 to 1 for certain ones. Yeah, I think it looks like the same. Yeah. Here you go. Retail Forex traders 50 to 1. 0, okay, and 21 to others.
So that's 51 for every pip. So you gotta do it a couple of times a day, but with all your different not strategies, what is that called?
The different pairs?
No, well, your logic, all the things you can use, you have a better chance of getting it out of here than getting it out of some foreign brokers not regular.
Yeah, I think so. But you gotta make sure your trading calls are correct.
Only thing you're doing something like, well, you got the news. When you're doing strategies, you gotta try to stay away from events. News will help you, but events can kill you. But your leverage is so low. Alright, so I'm going to work on this, and no, tomorrow. I'm going to work on the.
I think I don't know if you caught what you came on a little later. But
right, you said 7 o'clock meeting, correct?
Yeah, but I think you may have missed this. Did you hear what I was saying about today? Like the 5 had a 10% move today.
Right, I heard that.
Okay. But you don't need leverage for that.
Right.
Because when you compare it to Forex, the highest I got was just today talking New Zealand and US dollar. I think it was 1.8. That move over the last hour. It's not very much. Let me just pull it up here.
I mean, think about it. With your script, with the actual TA-led, with Ananda, with actually you're looking at IQ feed, you could pretty much, that could be pretty nice for you. You can put in a bunch of orders with that thing.
You could.
Those conditions meet, bam, it takes an order.
Yes, that's what I do.
Right. You got the gold. Wow.
That's CFD though. That just make sure you get that right.
Yeah.
But again, here's the hourly move on gold, 1.97%.
Yes.
For the hour. But everything else is all negative, right?
But you still can use that too, the negative stuff.
Well, right at this point, when you calculate all this, I wouldn't trade any of that because it's all negative, unless you want to short it.
Yeah, I mean, you can short it.
Right.
And you can short.
Right. So that would be your cha-ching, ka-ching.
Exactly.
Yeah.
Wow. Okay, now, within Ananda, can you change the pairs that you want to run out and check?
To check? There's no limitation on what you check. You could download as much as you want.
All right. If I have any issues, I'm going to go over it tomorrow from head to toe.
Okay.
Okay, I really appreciate it. I got that. Yeah, I wouldn't need to deal with that. brokerage, this should be sufficient because I have IQP, which I'm going to register tomorrow. Oh, by the way, I didn't get it. I'm going to do it tomorrow. I have a chance to today. I wanted to start in the morning when the market opens. Motive Wave.
Exactly. I was just going to say, Motive Wave will talk to Owanda.
It will what now? You can use it.
It will connect into Owanda.
Right. Mm-hmm. We'll use that.
So yeah, it's that's why I like that's why I keep saying I like Motive Wave.
But now, you told me before a while back that ID win-loss, they don't really care. But how's Owanda there? Well, you said they're regulated.
Well, for the states, they're regulated. Yeah, I mean, interactive anything Forex-wise is regulated in the states.
Mm-hmm.
Right.
What are the Forex brokers you use in the U.S.?
To be honest, if you're going to go with Python, I would do Owanda.
And with any others?
Well, you got this one called Gain. Only one mentioned here. You got Gain.
Gain was in there.
Yeah, Owanda. TD Ameritrade is another.
But you didn't like that one.
Well, it depends. Like, if you're going to trade as a human, yeah, sure, it's okay. But these are your brokers right here.
Right.
So yeah, Gain, IB, Owanda, TD Ameritrade, and IG. I've never heard of this one. IGEU USA.
Definitely check them out.
Yeah, out of all of them, the best for API support is Owanda.
Mm-hmm.
And then you can look at the size of these markets. But TD Ameritrade's done okay. It's actually grown. Right?
I'm glad I made it in this session. Really?
That's why I do these, man.
Because that's why like earlier today, I went, wait a minute, it's getting close to 12. So it's changed now. It's going to be 7 o'clock at night on Mondays?
Oh, no. Today was an exception. There's always going to be something. I'm going to keep it at 12 noon.
Okay, great.
Yeah.
Sounds like a plan.
And I'll be recording a lot of them, and you'll get access because of where you're at.
All right, thank you, man. Oh, man, TLib, you have the percentage. I mean, you have the ratios.
Yes.
That too. Oh, my goodness.
Yeah. That's what I'm saying.
That's really great.
Yeah, that's what I'm saying. Because the rate of change is really good. And you could do that on minute, hourly, 15-minute, 5-minute, daily, monthly, week, whatever you want.
You also have the script and this, and that, and this, and that. Bam, all the conditions met. Speak, get and go.
Yeah, in Python, that's the beauty of it. And, yeah, I mean, it's really good. And don't forget, you have not entered into the world of candles as well. Like the candlesticks, there's some really good stuff in the candles. But I don't want to overwhelm you. But
because think about it, when you're using the hourly, the 30-minute, the 15-minute anyway, that's another condition.
Yep.
You have the TLib, that's one. You have IQ feed. I gotta figure out a way how to plug that into the API to do it. What's the other? IQ feed. What's the other one that you mentioned?
I think that's it.
We got TLib. Oh my God, we'll go with that.
Yeah. Well, if you're going to do crypto, you got the CCXT as well for the access to the exchanges.
I'm going to get to it, definitely.
Yeah.
But this seems promising. I was looking at it like, wow.
Well, let me show you. I don't know if you've seen this. TALib, the indicators. This is really good. This is open source too, and it's free. So if you look at TALib, there's all the different exchange indicators. So there's over 300 indicators.
Okay.
So these are all the different types of indicators you have. You have momentum, volume, volatility, price, pattern. That's all candle, statistic, math, and math operation. So the volatility, that's typical technical analysis. True
you got a lot of work in front of me.
Yeah, but average true is a good one.
Mm-hmm.
But I think you can get the same thing just with rate of change percent.
Gotcha.
But the really good one that I like with TALib is this one, pattern recognition, which is really the candles. There's so many of these things. If you do candle patterns, yeah.
Now, create my account on GitHub. How do I link myself to finding some information that you put up on it.
Oh,
So
that's
I'm going to search in your name.
yeah. I'll show you. Just come under GitHub. So you got GitHub, com, and then I've got a project here, this one. So I'll put the link in the chat if you want to copy it. So right here, these are all the different scripts that I use that will, well, that's if you're using that email signal thing.
Yes.
And I walk you through the different examples of if it's Forex, if it's crypto. There's different utilities in here, and I've got a sample market order for crypto right here. If you want to delete your email, you have that here. So there's different coding examples.
Right. Great.
I really appreciate it. Thank you so
No
much.
problem, dude. 2.5 hours later, man, I don't mind. I do this every week. You know that, right?
Yeah, it doesn't bother me.
Yeah.
At all. We're learning a lot.
Yeah, it's good. It's good. But like I said, get in on the chat server because there's some other stuff that you might be missing out on if you have the time.
No, I'm going to go. I mean, this episode straighten up. I got to go through T11 again. I watched it before.
Mm-hmm.
Yeah, I got the rate change. I have that. I have the ratios. That's a lot, you know. So
yeah,
you put a lot of. Now, how many orders can you put in a day, Orlando?
As many as you want.
Okay, because there was some at one time, but they were like limiting people to.
Well, I think if you're going to do like scalping, yeah, they'll limit you, but I don't think they would want to limit you because that's a commission that they earn.
Okay. I appreciate it. Thank you so much.
No problem, man.
All right, let me get to work.
Yeah, it's a lot of work, but it's a lot of fun once you start to see the potential of it.
Right. Okay, thanks a lot. You have a nice one, right?
Okay, man. You have a good night, too. Have a good night.
Thank you.
Later,
bye-bye.